guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey everyone, good morning. Thanks everyone for joining. Happy Friday. And we're going to get started in a couple minutes. We're going to go from 7 a.m. to 10 a.m. where we're going to be doing gold through Comex, and then we'll switch over to US30 Dow going into Wall Street. Okay guys, please trade careful. Please use proper risk management on a Friday to wrap up your week. And let's see how the volume is moving this morning. Okay guys, we'll get started in 2 minutes.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Recording in progress.
Hi guys, good morning. Thanks everyone for joining. Happy Friday. Juma Mubarak to those that celebrate. Welcome guys. It is almost 7 a.m. Eastern. So if you're looking to trade or you are in any trades, just remember there's an hourly candle that's going to open up in about 2 minutes and can create some momentum, some volume in the market. So please just be careful while you're trading. I'm going to go over today's news. And we're going to do a top-down analysis on gold, and we're going to watch how gold trades through Comex, and then we're going to transition over to US30 Dow Jones and watch how it moves for Wall Street at 9:30. Today we'll be wrapping up the call at around 10 a.m. So we'll be going for a good solid 3 hours this morning, and all I can say is to everyone, just please use proper risk management, okay? This is when most retail traders make a lot of mistakes, is traditionally on Fridays. I don't know why, but I'm assuming it has something to do with it's the last trading day of the week and we're moving into the weekend, and you either are in drawdown and you want to make it all back today, or you're in a lot of profit and then you just start getting greedy and you start over leveraging, and then you do some silly mistakes. Okay, so this is where you really have to not just be a risk manager in trading, you have to be an account manager. So if you're already in the profit this week, you're having a fantastic week, this is when you have to start to understand to lower your risk, or just risk a little bit that you're willing to lose, but you're still going to end up positive if you take a loss. The reasoning being behind this is because the psychology, and then you carry this momentum going into next week, and then we want to continue and maybe build off of a second week, because we've had really good sessions live here with you guys, really good sessions with Dave, and also the signals have cooperated this week. So we feel that you should be doing good this week, and you have to continue that. So don't now throw everything out the window and all of your rules, and just because it's Friday. Okay, remember, we got to take Friday just like it's any other day in the markets. We have to break down the volume, we got to do a top-down analysis. If it's choppy, it's a choppy Friday. We have to understand how to trade chop or range. If it's a trending day, we have to know how to trade the trend, right? So these are the things that we have to learn as traders, and some of you guys are getting much better at this, and it's really improving the way how you're trading. So congratulations to those, but others that are still learning, this is that big obstacle that you're going to have to overcome. Okay, but together we're going to get there day by day. Okay, so if I can do it, I'm sure that you guys can do it. Okay, so let's just go over today's news, because it is a Friday. So we know how Fridays traditionally trade. So let's see if there's any high impact news on the Friday that can affect the volume. So early in London session, if you were trading that at 3 a.m. Eastern, we had the UK GBP retail sales month over month high impact news come out. Then the Eurozone and we have Eurogroup meetings all day today, and the Italian 10-year bond auction. Congratulations to Italy as well. They beat Ireland in the World Cup qualifying. So sorry guys, I went to the pub with my Polish friends and my Albanian friends. We had a great time there. Unfortunately, the result didn't work out in my favor. Albania lost 2-1. They had great opportunities yesterday, but they just couldn't put it away. And an amazing goal by Lewandowski, the header, and then another amazing goal by Zielinski on Poland put it away. But Kosovo won, and I'm still proud of them. They beat Slovakia, and so it's going to be Kosovo versus Turkey on March 31st, and one of them can qualify for the World Cup. So congratulations to all of my Polish friends out there. It was a great game. You guys deserve it. Okay, guys, and continue to move on here. We have normally we look at 8:30 a.m. Eastern. We look at some North American news. We don't have anything today. Our only news folders is at 10 a.m. This is basically when we're going to wrap up the call, but it's important to understand that this is a new hourly candle. However, more importantly, it is a new 4-hour candle on most securities. So make sure you know that at 10 a.m. And then we have our U.S. revised University of Michigan consumer report, and then our University of Michigan inflation expectations. And guys, the NCAA basketball, the March Madness continues. So if you're still live in the bracket, let's see what happens this weekend as well. And then throughout the day, we have a few FOMC speakers, and you can see it's a pretty light day in the markets news-wise, okay? And then this weekend, guys, I'm just going to help you guys. This weekend, maybe on a Saturday or Sunday, look into next week, what we can expect. Monday, March 30th, Chair Powell speaks, okay? So on Monday morning at 10:30, we got Powell speaking, so make sure if you are trading that, you know that that's going to be impactful. He'll be talking about monetary policy. You move into Tuesday, Jolt's job openings. That's telling me something. That when I see Jolt's job openings early in the week, I know that the first Friday of every week is the NFP. And then Tuesday, March 31st is last day of the month. And then we move into April 1st on Wednesday. So we have an upcoming NFP next Friday. So you can see how it moves down. US on Wednesday, core retail sales, high impact. April 2nd, Thursday, we have our weekly unemployment claims. And finally, Friday, there it is. There's your U.S. Unemployment, NFP. There it is. It's all right there. And then we have coming out of Europe, bank holidays due to Good Friday and Easter Monday coming up next week. So, and then Monday, if you look, the markets in the US will be closed for Easter. So you got to know that Friday is going into a long weekend. It could be crazy, guys. So this is where you got to think forward guidance. You got to look, how are you going to trade next week? What are you going to do? Okay. Earnings, do the same thing for earnings. This is this morning. Let me just make sure. Friday morning, we got Carnival Corporation. This is a cruise line. And a few others. I don't think any of these are going to impact the markets pre-market. And then after hours Fridays, there's very limited securities. There's just one. It's not going to affect the markets. Okay. And same thing next week. Go look into what we're looking at Monday morning. Go Monday after hours. Go into Tuesday. Go into Wednesday. I can see Nike is reporting Tuesday after hours. Again, go through the big names. Continue going through. I don't see anything. Keep going. It's a light week next week because we're moving into the Easter long weekend. So not much earnings going on next week either, okay? Just day-to-day news. You guys saw Trump spoke 2 times yesterday during our trading call when gold dropped 500, 600 pips and kept dropping. He spoke at that Greek independence thing, and he was talking, and the markets were volatile. He's saying that they agreed to a 10-day ceasefire. But according to Israel over here, just at 6:52 a.m., Israel's cats to escalate and expand attacks on Iran. So to me, that's not telling me that's a ceasefire, okay? Trump is trying. He's saying he's trying. Do I believe him? No. Is he full of shit? Yes. Do I believe this guy from Israel? No. Is he full of shit? Yes. Do I believe anything coming from Iran? No. Are they full of shit? Yes. So this is how it is to trade when there's geopolitical events and war and things like that, okay? This is probably for some of you guys, maybe this is your first war you've ever traded and you see the volatility in the markets, but we've been trading through these for you can imagine, over 20 years, I've seen a lot, okay? So you gotta move with the markets. You gotta adapt to the markets. This is where you have to adjust your risk, okay? Because these guys can be tweeting, these guys can say anything, there could be breaking news, we could be in a trade, and all of a sudden it's a huge candle going against us, okay? The only thing we can do is manage our risk. I can't predict when these guys say anything at any time of the day, okay? All I can do is adapt to the markets, expect volatility, expect them to say something, but what I can do is I can manage my risk. That's on me, okay? Donald Trump has nothing to do with my risk I manage. So that's what we have to work on, okay, guys? And stock futures edge up as Trump delays strikes against Iran. So that was what was spoken yesterday. And then around the news, you guys can read. There's all kinds. Volkswagen is in the news. There's all kinds. Oil market swings wear down traders as Iran war drags on. So if you guys want to read all this, there's something on crude oil, there's something on Bitcoin, there's something on the stock market. There's an article for anything that you're looking for. If you would just want to read. I believe that reading this stuff is more important than just watching Netflix. Okay, this can actually help you make money and learn more about the financial markets and educate yourself. Okay, so that's our news. Continuing to move forward, guys. Remember our trade yesterday? We took live. We got the signal right before our call at 4450. Remember, we got it and ended up breaking down. It was up here, and then there was some more trades after the fact. US oil hit almost 400 pips. And indices, guys, there was also a really nice short on NASDAQ over here for big pips coming down, okay? Dave messaged me this morning, guys. He's not feeling well. He's kind of sick. So he's going to be taking a day off of the trade signals today. So if we get any signals, they're probably going to be Scalper Pro AI ones. And we have to use caution again when we get those. If we get them, we'll look at the levels, we'll mark them up. If you guys see any signals come through, let me know, and then I'll mark them on the charts as we're going, okay? Let's just continue. Guys, if you want trade setups, signals, we do provide these for the team, okay? And there's a free Telegram channel pinned at the top of YouTube for you guys. Thank you guys, 200 plus viewers. If you guys can kindly leave a like right now, hit the like button, subscribe to the channel. We do appreciate it. We honestly really do appreciate it. It's what keeps us going here every single day. And to be here with you guys, that's all we ask from you guys is cooperation and respect. If you hit that, there should be a respect button instead of a subscribe button. It should be a respect button. That's what it should be. So guys, let's call it a respect button. If you respect what we do here, and then hit that respect button. That's that subscribe button, okay? And this is our free Telegram channel that we have here for you guys. So it gives you our YouTube link. Also, we post it the day before to give you guys notice in advance, and trade setups, the before and after, so you can learn, if you join us, how to take these. Again, we don't trade blind. Remember, it's not just you get a signal and you close your eyes and you just hit a buy and sell, because you should be learning about impulse moves. If the volume doesn't cooperate, then it's an invalid signal until we get the volume above or below to that's what trading is, guys, right? So signals help, but you still have to have knowledge of what you're doing as well, okay? And guys, that free, like, we also give you guys free blogs, free webinars, so they're posted attached to this free Telegram. And basically everything we do here, we have some fun times too, okay? We're here for education and entertainment. Hopefully I'm entertaining you guys while we're learning as well, okay? So that's the free Telegram. It's pinned at the top of YouTube for you guys. If everyone can join that, if you haven't already, please join that. And then guys, finally, if you want to join the team, we would love to have you here. We have Discord, education, signals, live trading, not just with myself, with Dave, and entire Discord sniper community. This will probably be the last weekend of this 50% off on these plans on a 3-month, yearly, and a lifetime. If you guys want to join this weekend, use this promo code SST, pay it forward, and you'll get that. And always, guys, take a look at our live sessions every Sunday. Sunday afternoon, we change these according to the week. I'll tell you guys, Dave always does New York's, okay? So Dave is always in this slot, Tuesday, Wednesday, Thursday, 8 to 10. So if you like Comex and Live Wall Street, Dave does those. I switch, okay? Because I want to grow and meet everyone around the world. So I do Tokyo. I used to do London. Maybe we'll do a couple of those coming, but it's really difficult for me to get up at 2 in the morning. So I prefer doing 2 weeks of Tokyo and 2 weeks of post New York, or these New York sessions, okay? That's kind of works with my schedule, works with my life and my kids and everything like that. So I'm happy with that. Dave's happy. So hopefully it works with you guys as well, this schedule. But if the demand is there, if you guys want like live Londons, if we get that channel to where we want, I will get up at 2 in the morning and help you guys out in Europe, because I do like that session as well. But I don't want to just do it and there's only 50 people on the call, because then I don't want to wake up or lose sleep for that, okay? So it's got to really be there, okay? But and also, guys, after this call, just a little later this afternoon, I'm going to upload your psychology and mindset webinar on the website, creating and sticking to a trading plan. So that's under the psychology and mindset series that I'm doing, and that will be available for you guys, okay? And lots of education, guys. I promise you, if you guys want education, you probably won't have enough time in 3 months or a year to go over all of these videos. There is a lot, and they're long form. When you get into these webinars, there's over 120 webinars, and they are at least 2 to 3 hours. We used to do a webinar every single Wednesday, and there's a lot of important stuff in all of these webinars regarding anything, whatever. Like if you come in this advanced series, and you can see, if you want to learn all about zone-to-zone trading, there's probably a 3-hour webinar. If you want to learn about wick analysis, you know how we break down wicks on these calls with you guys? You'll learn all about that. Top-down analysis, there's 3 webinars, 2-3 hours each of breaking down top-down analysis. Risk management, someone can use that webinar on these calls. How to identify quality setups, high probable setups right there. If you guys are just trading any candle, you're doing something wrong. You should be looking for high probable setups, okay? So anything is here for you guys, okay? It's all there for you guys. And then the free blogs are also available for you guys here too, okay? Now, guys, let's get into it. Thank you guys. Hit the like button. Few of you guys subscribe, 7 more of you guys will hit 95,000 subs on this call, and that's amazing. And we're 5,000 away from that 100,000, okay? So let's get into this. And happy Friday to everyone, and use proper risk management, okay? So I'm just going to get rid of this. I know you guys are mature, experienced, risk managed traders. Okay, we don't have gamblers on here. If you want to gamble, you go to your local casino this weekend, but you don't gamble the stock markets or forex markets or future markets. This is a business. You got to treat it as such. Okay, you are a businessman now. You are a businesswoman. You're no more gambling. Okay, so let's get into this. Welcome everyone. Good morning, everyone on Zoom. Sherry, good morning. Happy Friday. Happy blessed Friday to you. I hope you have a great weekend, Sherry. Lukeman, welcome. Conrad, Mike, thank you for joining. Dennis, welcome. Samuel, thank you. Your bias is short due to Friday, last day of the month, and head and shoulder patterns. Okay, let's see. On gold, Samuel, let's see if this plays out. Okay, and if it does, Samuel, journal, make some notes, and if it actually plays out your prediction, then you're doing something well in trading. Then hopefully maybe you look at these setups for another time, right? So that's good. I love how, Samuel, you at least did some analysis prior and now you got something you're looking for as opposed to just guessing. So that's amazing. I respect that, Samuel. Amazing. Good job. Dale, welcome. Good morning. Nicholas. No, London volume is rubbish usually. Okay, it's good to know, Nicholas. Thank you. But sometimes in London, it's really good sessions. Okay, but that's good to know. Okay, so then I can sleep a little bit longer. Okay, guys. So what we're gonna do right now is we're gonna do a top-down analysis on gold. We're gonna break it down from the daily, hourly, down to the 5 minutes. We're going to put some lines on our charts. So you'll see me put 2 purple lines. That's the high and low of today. You'll see some yellow lines. Those are daily points of interest. You'll see some white lines. Those are hourly points of interest. Then finally, we'll move it down into the 5 minutes. And then you'll see all of these lines on a higher time frame on a 5-minute chart. And you guys know what those lines are. If the volume is below those lines are resistance. If the volume is above those lines, the volume is support, okay? So that's basically learning support and resistance in a nutshell, okay? So let's get into this right now. I see 5 minutes is pushing down right now, but still I see support from yesterday. Guys, you remember, okay? Just quick little analysis. Remember our call yesterday? This was the big drop. That was that nasty spin top break even candle that took me out. Oh, I didn't sleep all night because of that. And with Albania losing too, I got no sleep. Okay, so it was a rough night for me. No, I'm just playing, guys. But anybody see the biggest drop? Where did it come down to? Is that not a psychological number of 4350? Like right there. Remember we talk about psychological numbers? So this is how you can backtest yourself. Look at that drop. Where did it stop and pivot? Right at 4350, okay? And that's where we started to build back up, came back down. I don't see it coming back down into here. So I see a higher low, okay? If you're just looking off the 5 minutes, right there when it pivoted, you see it kind of made a double bottom and continue to produce a high over here and continue to go up. Then we got like the double top, lower high. Now we have this 5-minute trend coming down. But you can still see we still have built a little bit of an uptrend from here. So even if it comes down, like it can still pick up support here. It can pick up support right here, 50% of that body. It can pick up support right here and then come right back up, right? Okay, so, but we're gonna see today if we're gonna break all this down and then gold is really gonna sell off, okay? So that's just how it looks on the 5 minutes. But let's do our top down on the daily now, okay? So daily, okay? See now, there's candlesticks on my chart. There, they look. There's black ones, there's blue ones, there's some with big wicks, there's some with small wicks. Okay, there's patterns. So it's the same thing, what I just showed you on the 5 minutes, but this is daily. Instead of a 5-minute candle, this takes one entire day to close, open and close, 24 hours. I can see today's daily candle is an inverted hammer right now, and with 9.5 hours to go, okay? So the day is still early, lots of time to close. This candle can change its form. It can become right back up bullish and break out. It could flip bearish and then start filling yesterday's wick and maybe targeting Tuesday's wick, and that's our weekly low. Remember when Donald Trump, when the market was coming down and and he tweeted it at 7:03 a.m. when we started our weekly call, and that brought the market, and he saved it from collapsing. So the market now is, again, it's digested what he said, lower high, lower high, lower high. Sellers are still pushing it down. If we close bearish, we could open next week with a Black Monday and continue selling. But with the news that he was saying, the 10 days ceasefire, this and that, maybe the market will recover. I don't know. I don't know what's going to happen this weekend. Who knows what type of news or can escalate, okay? But first thing what I can do is, I can't predict what's going to happen on the weekend, but I can predict that I'm going to do a top-down analysis. That's one thing for sure, I know, and this is how I do it. I find the highest point, okay? Very common sense, just look for your highest point. This one, in fact, happens to be gold's all-time high. It's just below 5,600. So that's also telling me a nice psychological level number, okay? And then what I do is to figure out a zone, I just bring it down to like the most recent bodies. Remember, sometimes it takes you 2 or 3 bodies to figure out a zone. That's how I figure out that zone. That's it. And once you figure it out, stop saying to yourself, is it here? Is it here? Is it down there? Is it this zone? Don't confuse yourself. Just go with right there. You see, don't make these boxes where they look silly, where it's a whole thing like this. Make it like where the volume was consolidating, okay? And that's good. And then just go with your gut. Okay, that's how I learned how to do this, because I kept second guessing myself 20 times and then it was confusing. So then I just said, let me just go with my gut and then forward. You know, when we say back test and go backwards, what about forward testing? Forward testing. Bring this box into the future, right? And then now I can see forward testing right there when it came right into that zone. It pushed right back down, okay? So let's continue forward testing this zone into the future. Now we're seeing that the volume is diverging away from this zone. Another word for diverging is moving away. It's moving away from this zone. And you can see if we ever do come back up there, it might come back in that red zone and might push it back down. And then we go through our rules. If it breaks out, is it an impulse new all-time high breakout and it gets rejected and then sells down? Or is it going to come back up there and close above? Is it going to come all the way, break through, and it's in a big blue candle closing above? Then what we do is red to green, maybe a pullback. Now it's all pending buyers ready to take gold up to 6,000 or higher, okay? But right now, it's coming down, okay? So what I do is I measure it from the most recent, where how low it came out of that red box, right there, to that wick. So a wick is also a point of interest right there, okay? So what I do is, again, a yellow line to correspond with daily. And then I look at the number. It's right at 4,400, very psychological number. It's basically right where we're trading at today, right now. And then what I like to do is other points of interest. So follow the wick. Coming up there, you should see that there's a body close, a body open, and a retest right there. Exact locations. So when you have like exact location and touches, that's perfect to put a line. And then look at the number 4650. Very psychological. So then it makes sense why it closed there, why it opened there, and why it retested there. That's psychological orders right there. Okay. One other thing was when I have a red box, I want to correlate it, complement it with a green box. So how do I find a green box? I look at the yellow line. That's a point of interest, your reference point. And then I bring it down to these bodies. Remember when we were trading here at an all-time high back in October? Look at it. It did a 4-bar M pattern. What we were talking about in 5 minutes. Blue, black, blue. There's your M. Up, down, and started that leg coming back down. Okay, see what I did there? I just kept it with the bodies. Like there's a body there and there. And you can stretch it into the future. You can see when it came in, forward testing, back down. Came in again, back down. But you see, it's not just breaking down. It's coming up right there. There's a point of, there's the double bottom holding. Then they got another higher low, then another higher low. So it's ascending. You could have even had a trend line coming right into that red box. And then there's the physical breakout where that candle broke out. When that happens, my zone is the same zone. I switch the color. And then now you see how it turns forward testing, how it turns, here's the pullback. How many bars did it take you to come back in? So that's why we don't say, don't FOMO buy, wait for retracements. This is where you get your high probable setups. It took 1, 2, 3, 4 bars and it was back in. Then it consolidated 1, 2, 3, 4 bars, but it did not break closed, sellers did not close below here to make it a red box and continue dropping. They closed it back above, and then you get a couple of retests, and then second leg traditionally has more volume, and there's a good example of it. And that second leg coming out of there took us to the all-time high of gold. And you see when we were retracing back down, we still did not come in the green box. Forward, forward, forward testing, and there's when we broke it. So they grabbed liquidity on Monday, and then Donald Trump saved the market when he tweeted right at 7:03, brought the market back up. We moved back up Tuesday. Wednesday, lower high, brought it back down, and Thursday was big selling pressure, and then look at where we are right now. So will it come back up? But I see lower high, lower high, lower high. So maybe we're going to close inside this box, maybe close below it, and we could be continuing to push down early next week, depending on how this daily candle closes. Still early to say. It's 9 hours to go on it. But what I can do is I can stretch this green box into next week, next month, and continue to play it out, okay? So now what I do is I look more what's going on with this week's volume, okay? So first thing that I can see is this bearish candle. I can already see we transacted in it, okay? So sometimes it's easy to do a top-down analysis, sometimes when you can see already candles that have already transacted and closed, okay? But you guys know what I do. When I see a black candle, like close with significant volume, first thing I do is kind of just cut it in half, just to give me my halfway point of that body of volume, okay? I could do it halfway of this black candle, okay? You see it came up, still below it, short wick, continued to push down. I could cut this next black candle in half, and then you see it opened blue, 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 right at the cut point, halfway. Sellers are there, pushing it right back down, came down, created a new low, closed right at that wick. That's like a continuing the downtrend with significant volume, cut it in half, same body. And then you can see on Wednesday, we transacted right in it and the sellers are there pushing it down, okay? So we continue to push down. Now we have, how I always say, open and closes of candles are points of interest. You can see there's the body close, there's a body open, there's a body close, there's a body opened. So we have to put a line like right in this location, right there, okay? And then when I look at the number, 4505, right around that 4,500, okay? That psychological number. So there's still a lot of sellers at resistance. There was an impulse break, but still sellers are there pushing it down, okay? So now look at yesterday's bearish volume. It is actually a bearish engulfed candle where it engulfed this blue candle and this blue candle. Look, it came down and it closed below these two blue candles. So that's an engulfing bar. Okay, that's a strong bearish bar. So what I do with that thing is I can cut that bar in half. I call these also structural bars. Okay, if you don't want to call it a structure bar, that's fine. Just understand what an engulfing bar is. Okay, you see how it closed below in this volume, okay? So it basically engulfed the buyers from Tuesday and Wednesday of this week. Sellers are in control, okay? So with these candles, what I do is I like to figure out a point of control. Point of control is I'm still going to figure out 50%, but I'm going to figure out the buffer, a little bit above, a little bit below to give me a zone, right? Okay, so how do we do that? Grab your Fibonacci tool. You should be learning this, guys. We did a big webinar this week on Wednesday, 3 hours, so maybe review it this weekend. There it is. There's the halfway point, okay? 4, 4, 4, 3, and then there's my zone, the zone of interest, right there. With the Fibonacci tool, it's either your 618 or 382, respectively. However you have them placed, if you have it reversed, that's fine. But just understand those numbers. You're looking for the 618, 0.5, 382. I make it red to complement the volume, the sellers. We're in control, right? So I want to find now the selling point of control on a pullback. And you can see now how it came in yesterday. Today. It came in blue, 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 blue. Our high broke through there, but still lower high from here and pushing right back down. So if this was a 5-minute setup, I would tell you this is a inverted hammer candle. The sellers need to exhaust this blue volume in order to create a shooting star to continue to push down and fill yesterday's wick and maybe target Tuesday's wick and continue to move down. But we got to understand we're trading in a monthly demand zone. This green zone came from back in October where it's still holding. So it's not easy to break this zone. But when it breaks, then we could start to see gold really drop. So you got to be careful here too, okay? Because there was buyers. Remember Donald Trump tweet on Monday. There was buyers that picked it up right here on Tuesday with a higher low. There was buyers yesterday that saved the market from dropping right there. And so far we got a higher low as well as our low of the day, okay? So now that we figured out our point of control, the other part of my strategy is stretching it into the future, right? If we keep the volume below, we could still sell. If the buyers get it back up and close above, then we're going to flip that zone green to take us back up to here and to see if we're going to go up to there, okay? Now what I do is I dissect today's candle. So where's the close and open of yesterday and today? Right there, points of interest. Look at the number, 4380, $5 off of that 4375, but still good, solid number, whole number. 60, 70, 80, 90. These are whole numbers, okay? When it opened, it was initially bearish. You can see opening price, black, 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 came down. Look at the wick. The wick, the low is at the number I like, 4375, okay? So I know that it's holding that psychological level. There's my purple line. Purple line on my chart represents either a low of the day or the highest point of the day, either low wick or high wick. If it's an ignited bullish bar, that is the lowest point of a candle. That would be where the purple line is, okay? So there was a little bit of drawdown, but it did not come all the way down and fill yesterday's wick. So yesterday's wick is still a point of interest because if we flip the candle and we're coming down, we still have to do our job and fill this wick, okay? So mark it, draw a line, right? Look at it. There's my yellow line, and look at the corresponding number, exactly 4350. That's what I mean, guys. Now you're going to start to learn why did the market come down here specifically right here at this psychological number. Now you're expediting your learning. You're learning about an auction theory. You're learning how psychology works in the markets. You're learning about efficiency. I can get really into this, but it might confuse you guys what that means. But what it means is that's where there's a huge block of orders, and more orders are situated at that psychological number because it knows that the market wants to come to that psychological number and pick up that block of orders, okay? It's an efficiency. The more orders it can pick up, the more volume it accumulates. And to move gold on a daily or weekly or monthly, you need volume. Otherwise, it's just going to trade sideways if there's no volume. That's what is a consolidated market. So to get a trending market, you have to pick up big orders, right? Think about when you go to the drive-through real quick. This will take 1 minute, this analogy, but maybe it will make you understand it over the weekend. Tomorrow, when you go buy your coffee at the drive-through, you might see a whole lineup of cars at the drive-through, right? And if a cup of coffee costs $2 exactly, $2 exactly, think about that. That's a nice whole psychological number. And then I go buy my coffee, I give them $2. Either in Canada, we give them a toonie. In America, you give them 2 single $1 bills. They'll hand you the coffee, $2. You move. You continue moving. The person behind you comes in, coffee, $2, 2 singles, continue. That drive-through moves fast, efficient, okay? Everyone gets their coffee and go. We got busy days. That's how the markets work on efficiency like that at these whole numbers. Now, if that coffee costs $2.13, they put that nasty tax on us, okay, $2.13, and I don't have 13 cents on me. Now I got to go into my little console and I got to find some pennies and I got to find nickels and dimes and waste time. That wastes time. Then if I don't have that change, I give her 3 singles. Then I got to wait for the person at the drive-through to give me my change back. And then the person behind me is honking the horn because they got to go to work. And you see how that slows down the efficiency? Does that coffee analogy help you guys? That's how I learned how to understand how efficiency works in the market. It's a simple drive-through analogy. And if the prices are fixed, it makes for easy flow. Do you guys understand that? Yes or no? Did that help? Because I'm telling you, that's how I learned this. I'm telling you, I was self-taught. I teach myself some different stuff. Anytime I'm in the drive-through, if they're taking their sweet ass time at the drive-through when I'm buying coffee, guess what I'm doing? I'm scalping 1 minute candles on my phone, on my mobile, waiting to pay for that coffee. Unless it's efficient, then I'm moving. Okay, so we came down. We came back to the opening price. Follow the volume now, okay? Because a lot of you guys don't follow the volume. You guys just run. Are we buying? Are we selling? Are we buying? I'm teaching you a life skill. Please continue to learn. Look, higher low, higher low, higher low. Even if we continue to break, if it flips and we start filling the yesterday's wick, we're going to continue to break down. Where are we going to break down? We're not guessing, okay? This eliminates guessing. I don't want you guys guessing where it's going to. I want you guys to know exactly where it's going to go, okay? Right to, why don't you just go to the next bar? This is Tuesday. So if it breaks here, 4350, we're potentially going to come and revisit Tuesday's low. And look at the number, 4300, 4305. Psychological. Why did the buyers step in right at 4300? Same analogy. And then if we drop all the way to fill that huge drop, look at the number, okay? Just draw a line. This is how I studied this. Look at the number, 4100 on the dot, okay? What, did it just come there just for a reason? No, because there's a big block of orders waiting to buy gold at 4100. So the market just needed one. It was coming down, 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 picked up that order. Donald Trump conveniently tweets that the market is, we're coming to a ceasefire, and then built off of that. So this is where I understand how markets can be manipulated. Like, how did it just come down there and then there was a tweet all of a sudden to save the market and reversed it right back up? That shit happens. There's nothing me and you can do about it. But what we can do is we can do our analysis and learn how the markets move, okay? Now, let's continue, to follow the volume upside. So we came back up today, blue. We transacted right into yesterday's bearish volume. The buyers were actually, they cut through, because normally when we come in here, it gets a wick and goes down. They broke right through, and broke through the zone. So there was damage done there. So it shows me that the buyers were still strong. And how high did they get up to? Well, look at the top of the wick. There it is, purple line. Okay, look at the number. Look at the number, guys. Sorry for shouting, but look at the number. This is why I'm so passionate about this. Look at the number. This is today's high. Okay, it's already printed so far. And look at where it stopped at 4475. Okay, 4475. Understand these increments in trading, 25, 50, 75, 100. That's how, when they're doing interest rates, they move in quarter points, 25, 50 basis points, 75 basis points, or one whole point, okay? Understand that these are psychological levels, 25, 50, 75, 100, right? Not just whole numbers, okay? Like not just 500, but if you're breaking it down even further, like me, I'm a scalper. So maybe I'm not looking for a whole move from 500 to 600. Maybe I'm looking from a move from 500 to 525, from 525 to 550. Do you guys understand what I mean? Quarter increment moves, okay? Those are whole psychological numbers as well, okay? Now look at, the sellers were there. Did the buyers manage to get it all the way back up to this point of interest, opening price? No. So that's a lower high following a lower high, following a lower high. So I can see that the offers are still coming down on a higher time frame, and they absorbed, they filled all those buyers by offering and continuing to push it down, where we're trading at right now at 4415. So this is basically an inverted hammer candle. It looks like a hammer upside down. So it's still holding majority of the opening balance volume with a low wick. So I know that there was a lot of big buyers that bought the open of today, but they could now, when I say, guys, the candle could refuel itself and continue to come up. So if it comes back up blue, we have to target the bottom of the red box and look at the number 4430. I don't like to put like a yellow line here because I know what this box represents. I know that the bottom is a point of interest. I know the middle is a point of interest, and I know the top is a point of interest. But for you guys, if you want, like if you're learning, put a yellow line right at the bottom of the box too. And then that will, if you see the blue volume coming right there, you got to know that this represents something, okay? Because it could come right up there. Sellers are there. They're protecting the red zone, and then they push it back down. If the buyers manage to break it through there, it's not going to come just fill the entire wick unless there's some catalyst or some big news. It's got to revisit here. Then it's got to revisit the top of the red box, okay? So you can have yellow lines right there. I'm just doing it for you guys. I normally don't do that because I know what my point of control box represents. It's that golden zone that I showed you on the Fibonacci tool. So now what we can do is break down the current volume, right? How? We go into lower time frames. But before I do that, I look at the overall physical pattern, okay? So I can see something building. It's coming down, building, coming back down, and could be building. Okay, we can recognize this. This is like a double bottom. Okay, if this was a five, but I always say, guys, we got to get blue volume like to close above here, because then if we pull back, we want to pull back into a green zone, and then we potentially can start to break out. But it's not there yet, okay? But I can see it could potentially start building the second bottom, but it tried already today and they rejected it back down. So we got to see if it can continue to gain its volume and come back up. Otherwise, sellers could flip this black and start trading down, but we know we have a yellow line there, and the bottom of green zone is a yellow line as well. I know it's a lot of yellow lines, but I want you guys to understand that these are all critical points of interest, okay? Now, let's go to the hourly, okay? So obviously we are in a downtrend, okay? You can see from I know what this red box is because it helped me with my analysis. So the second time it came into the all-time high box, sellers pushed it down, came back up. Look, if you cut that big black candle in half and found the point of control, you could have sold right at 52.30 and have a massive swing trade going on right now, okay? And if you just consolidate it, remember sniper, trap, and gap? It takes two bodies to like kind of see the volume. See how it was kind of barcoding? Black, blue, black, blue, black. Continue that zone across. There's the closing volume below. There's the retest in it. You could sell right there, stop loss above there. You got your bear flag and continuing to drop, okay? So it's very easy when you know what you're looking for, but I know some of you guys are learning what to look for. And then coming all the way down, lower lows. So even when it comes up, remember like yesterday, remember that big drop on the 5 minutes on gold yesterday? And then those blue 5-minute buyers were buying and they got stuck and then it continued pushing down. That's the same thing that can happen to these daily buyers. They could be buying and the selling pressure is not coming from a daily, it's coming from a weekly and a monthly. These are bigger sellers selling from the previous all-time high zone, okay? This is institution selling, this is not me and you. So they could continue to push this down, but they really have to fill that big wick. But remember yesterday, it did fill that wick. Remember when it came down at that 1 minute, right at 12 p.m., 12:01, and it came down 160 pips. I didn't have enough time I was securing my break even, and it flipped right back up, and then it came all the way back down and filled that massive wick and continued dropping. What if this happens on a daily as well, going into next week? Remember, we're going into some news next week, and we have NFP on Friday, okay? So if those job numbers are good or bad, it could continue to dictate the way how gold moves, whether it will recover here and come back up with those NFP numbers, or it will break down. So we could see also, when I'm thinking about this now, I'm kind of playing it out what could happen next week. We could trade sideways. It could be consolidating in here. Like here it went down black, come back up blue, go down black, maybe we come up blue a little bit, maybe by Wednesday it comes back down black, and then it's getting ready for NFP, and the market has been accumulating for a week or two to break it bullish or bearish. You guys understand? Like, markets are engineered, right? They're collecting, accumulating volume for those big news announcements, and either to make it grow up bullish or bearish, right? And that's what you got to learn when you're trading, right? You got to paint a story in your head. You know what I'm trying to say? You got to paint a story. You got to kind of predict. How I was talking with with Samuel. He was like made a story in his head about the bias is short due to Friday last day month and head and shoulder pattern. He's playing out a story. He's predicting something, and then if you watch it actually happen in live time, then you're going to say, oh my God, like I literally predicted that. So that's what you got to do, guys. Don't just, I'm a scalper, believe me. I scalp 1 minute, 5 minute candles, but you see, I really do some hardcore analysis on the higher time frames. I do this mostly on the weekends, okay? But I'm taking my time with you guys because I really want you guys to learn this, okay? Because I know that when you learn this, you're set for a trader for the rest of your life, okay? It can really help you out, okay? But it takes time to learn this stuff. And don't rush yourself. Okay, you see how I can rush this and people are saying, Ron, come on, trade, trade, trade. But I'm not worried about those people. Those people just don't want to learn. Okay, I'm more concerned and passionate about the traders I want to learn. That's why if someone's yelling at me, Ron, are we buying? Are we selling? Are we buying? I don't care. Okay, those people don't want to learn. I'm not here for those people. I'm here for you guys that want to learn. Okay, and that's what I'm here for. I'm a coach, right? I want to teach you what I've learned over the years and relay it, pass it on to you, pass the torch on to you, and then you guys go and you guys pass that torch when you learn it to someone else. And I promise you, good karma comes back and will reward you. So I'm trying to bless you so you can bless others, okay? Let's put it that way. Pay it forward, right? So let's break down this daily candle now into the hourly. So same thing, we're gonna see black candles, blue candles, we're gonna see big wicks, small wicks, you're gonna see double bottoms, you're gonna see a big black bar that you can cut in half, you're gonna see consolidation, you're gonna see the same thing, all right? So when you understand what you're looking for, this makes easy, okay? Now we're just coming down to a lower time frame. Instead of this candle, this big blue candle taking 24 hours to close, it's 60 minutes. But it's the same thing. I see a bullish engulfing candle. Did it engulf those two black bars? Yes. Did it close above structure? Yes. Is that a candle I can cut in half and find the point of control of this hour? Yes. Everything should be yes, 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 right? Can I follow the volume? Yes. Can I see it where it traded right there back up? And then it got rejected back down and it came back up again, same location and rejected back down. Is that not a double top that we recognize where it comes up? There's one top coming back down and then it came back up, same location and back down. That's a double top, right? If you know what you're looking for, right? I know what I'm looking for on a double top. There's the rejection, a rejection, lower high, lower high. There's the engulfing bar. See this big black bar? What time? It's a specific time, 3 a.m. This is the start of London. It engulfed, right? So there you go. You got a rejection, an engulfing bar. This is the perfect bar to continue selling on right here, 4 a.m. If you caught that bar, you sell, stop loss either above here. And look, you caught that. And then even if you cut it in half, look, you see the next hour came in and got rejected back down. Next hour again came in, lower high, and continued pushing down, okay? So you could have followed that volume from London and made your daily goal today. You didn't even have to be on the call with us. If you traded London, that should have been an hourly sell setup, okay? If you didn't take it, that's fine. And if you bought these impulse breakouts and you got stopped out, there's your review. Why are you buying in the second top when you got to predict that second top has those sellers, right? If the blue volume closed above this purple line, now we're having a different conversation because now we could change the depth of market. This red zone could turn green and then we would look to buy pullbacks, okay? But that didn't happen. You see it come up blue, 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 big rejection. It came back up blue, 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 but did not fill the wick. There's your clue. And then push back down. And this candle, blue, 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 rejected and engulfed. So sellers are showing me engulfing and they're rejecting at this area where there's a lot of selling pressure in the past, right? Okay, so now let's dissect what we got going on right now. Okay, so remember the top of the green box, 4,400 is a yellow line. That's our point of interest we just did. There's another point of interest. That's our opening balance. There's the lowest point of the day. Okay, so I can see right at futures market, 8 p.m. it came down, and then they picked it right back up at 9 p.m., 10 p.m., 11, midnight. There's 1 a.m., 2 a.m. London started reversing it down, 3 a.m., 4 a.m., 5 a.m., 6 a.m. This is 7 a.m., okay? So now I can see hourly volume right now. This hourly candle is going to close in 13 minutes. You see how it's building a little bit of a base of support right here? So again, I'm going to draw a line, a white line. When I do hourly analysis, I use a white line. There's the close, there's the open. I'm going to assume that this candle in the next 13 minutes is going to remain blue and stay above here. And then what I do is I look backwards. Okay, so I can see when the big blue candle closed above, see how it was ignited and continue push. We revisited here. Then it used to be in the past a wick resistance, a wick resistance, a wick resistance. Cutting this, look, we also just, by placing it right there, we just cut this big black candle. Yesterday, the sell at noon, when we were in it, right there, we just basically cut it in half. And then I can see that this is a great area we've located because look backwards. It was support there, support there, support there, support there, and support there. And how can we verify this? Grab your Fibonacci tool. That noon candle has already completed its closure. And look, I just went from the open to close. And look, there's the 0.5. It's right there. So we're basically in the point of control of the big bearish black candle right there where it was red, right? Look at, follow what I'm doing. and then it came back in there, red, back down. Now it closed above it. So we have to do our job, make that zone green, right? And then look, we're trading again, right in that zone, okay? So we're in an hourly support zone, okay? So we could be building, but now we're barcoding volume, okay? And the sellers are still in control. I see a lower high, lower high, lower high, a lower low, and a lower low. So it is still pushing down, okay? But it could be building right here. And here's where we can box the volume in. Like, look at where it's consolidating from right here to here, from that zone to that zone. If I make it neutral, this is where I say, guys, you know, this is where the market is accumulating right now. It's black, blue, okay? So 3 options. It's going to stay in this zone for a little bit and continue to accumulate in here, right? We can scalp this zone on the lower time frame if it's worthwhile, or we got to continue waiting to see if buyers can close above here. Maybe retest this. Then we're moving up to this yellow line. Maybe up to there, right? Okay. Or sellers are going to continue pushing down, and they got to close it below this green zone so that we can make it red coming back in. Then they can sell it back down to basically daily opening price or the lowest point of the day, right? Okay, so this is where now I look at the hourly pattern. I can see that how it's building. Look, consider this all to be one bottom, okay? Forget about all this, just one bottom. Think about this as the top, right? Now we're coming right back down. See, there would be the double bottom at the daily low. If they break and grab liquidity, it could spike back up, or we continue dropping like yesterday. But right now, look at the buyers are stepping in on the hourly, and they're building this block right here, holding it from coming down. So they're building that higher low to continue to move it back up. Okay, so this is like a 5-minute setup. You know, when I'm scalping, sometimes if I scalp, I'm just looking, remember, fill that wick, get up to there. It was that exact blue scalp I had on yesterday's call that moved up and right, and then it came tumbling back down. So even hourly could move up to here in that red zone, and then they bring it right back down. Okay, but we could be building out of here today. Okay, so you guys understand. Now we did this on the hourly, daily, hourly. So let's now move down to the 5 minutes and do the same exact analysis, okay? Let's move down to the 5 minutes. 5-minute candles. Look, they made a double top at basically at the highest point of the day and continued dropping. Now I know it's been coming down, but we still have support right there. We got support right there, okay? So what I see now is the 5-minute candles did break right down there, but no black volume closed. This is that hourly green box we're in right now. Okay, so it just technically came up, closed above, could be coming down. So if we move up on these 5 minutes, we have to respect here, 4430, because we had an impulse, no blue volume close above there. And then if it does break out from here to there, we could trade, that's a 150 pip move to that daily point of interest. But look at where all the wicks are. Wick. So there's a lot of stuff we got to fill through there, right? So even if I just scalp it through there and I get about 80, 90, 100 pips, that's when I can reduce my stop loss to break even. And because I got to respect this red line, because look at the 5 minutes in the past. There was a body, rejection, impulse, rejection, impulse, rejection, impulse, rejection, impulse, rejection. So it could just come right back up there and get rejected back down unless we can close above some structure and build off of it, okay? We're nowhere near that. Look right now. So right now as it was coming up, there's a wall there. It's like a pivot. You can see right there. There it is, okay? So what I like to do too is when I draw my line, look at the number, 4423, around that 4425. Go backwards, okay? This is another thing what I love to do. When I figure out the pivot, I go backwards. And then I can see, okay, the line was support. That black candle closed below there was the retest to drop. So I'm teaching myself when I'm not in a trade, okay? And continue with this same line, the same line, and then you see, oh my God, it produced a 4-bar pattern right here. It went down black, blue, black, blue. That could have been a quick buy scalp, but you gotta respect up here. Otherwise, if you don't, the market comes down. With being a scalper, you have to be extremely disciplined, okay? You have to be. Otherwise, don't learn scalping. I'll tell you, guys, I've been scalping the majority of my life, and I can tell you, if you're not a disciplined person, scalping will not work out for you. I'm telling you the honest to God truth. So that's why what keeps me disciplined in scalping, if I'm taking a buy from here to there, I have no problem opening a trade and closing it right there, getting my 50, 60 pips and getting out. Okay. I've trained my brain to trade like that. And someone will say, well, Ron, what if it goes all the way up there? I don't care. Like it's not part of my scalping strategy. Okay. If it goes up there, great. I'm just looking from here to there. That's it. Because I can say the same thing to you. What about these traders here that came right up to there? They got their 60, 70 pips, didn't do anything because they want more, and then it came back down, break even. And some traders don't trade like me with a break even, and then it came and hit their stop loss, and then they're down 150 pips. Okay, so I can say the same story. What if it comes up there? You don't do anything, it gets rejected, you don't have a break even, your stop loss, you're out 100 pips. Okay, we can have the same talk. You got to just figure out what you're looking for. Okay. Otherwise, if the volume is cooperating and it gets up there and it closes above or holds majority of 50%, then we could be building off of it, right? That's where you can utilize a trailing stop loss and things like that. But let's just see what's going on here. Okay. So the 5 minutes, we know that there's one bottom here. Okay. So look, it came down. Consider this all to be one bottom. Now we're figuring out, is the neckline right here, or is it going to be more at the daily right here? This could be where the neckline is. And then we're pushing down. Will this hold as support? Will this hold as support? Will the hourly white line hold as a higher low support, or a double bottom? Then the double bottom, I know because I trade these often, has traditionally more volume. Then it's coming back up to break this, maybe come with more volume to fill all of these wicks, create a new high. Then it gets rejected back down to retest this location to take us with more buyers to break out of that daily yellow line. You see, and that's a pattern everybody should be able to recognize. Okay, now look, we're closing with a nice hammer candle breaking out. We're 5 minutes going into 8 a.m. I'm going to check my spreads right now. Okay, my spreads on gold are fluctuating. Wow, from 1 to 2 back down to 0.5. Okay, so we're getting some fluctuating volume. Notice how that candle was black, came into that green hourly zone, back up. So we got good support. It produced a new high, close. We got another bullish ignited candle. So what I'm thinking is maybe the bigger resistance is going to be somewhere like right around here because it's a daily point of interest. So maybe we watch, see if the buyers can bring it up here. And if you're a buyer and you're in this big leg, just understand you're coming to this 4430 area. It's a daily point of interest. And this is where a lot of 5 minute volume has been getting rejected. Okay. So this is where we have to watch. Now we can see like a V recovery. It came down, back up. Is this going to be like the neckline or the bigger one? Then we got to assume maybe coming back down, maybe it breaks out at 8 a.m. going into Comex. Okay. Is anybody in a trade right now or sidelines or just watching? Guys, awesome. Almost 400 viewers. Guys, if you like that type of analysis, hit the like button, subscribe to the channel. Thank you, guys. We hit 95,000 subs. I appreciate you guys. Respect to all of you guys. Thank you. Are these top downs helping you guys? We did Monday. We did Tuesday. Wednesday was a big 3-hour webinar series. Then we did Thursday, and now I'm giving it to you guys on Friday, right? And I do these fresh with you guys every session, okay? You don't need to do that. If you do a good one at the start of the week, either Sunday or Monday, you don't, like if I wasn't trading with you guys, I would not be deleting these lines. I would leave them with alerts all week. And then if the blue volume gets, if the 5 minute volume gets up there, okay, then I got my levels, right? I got my levels up there. If it starts going down bearish, I got my levels. I don't need to get rid of this. All it takes is one solid top down on a security, leave it, just place alerts, like place an alert. If it comes back down to the opening price and you're away from your trading station, you'll get an alert. That doesn't mean if it just comes down there, we buy blindly. We watch, we see. If the volume comes down there, black, I get an alert. Okay, I could be looking for a buy, but what happens if it closes and retests this, then comes back down? Then I see it grab the lower low of the day liquidity, come back in. That's something I recognize. Okay, then I buy. But I see I got my alert there. I did not buy. I see it got respected at the low of the day, came back up. This is the resistance back down. Then I see they broke it, grabbed the liquidity. It came back into where it was consolidating in here. This is where it was moving black, blue. It was coming down black, blue, black, spike the liquidity, come back in, fake out, come back up blue, black. Then it breaks out. Okay, so it broke out. I know that they grabbed some liquidity, close. I look for the retest. If I get what I'm looking for, that's something I recognize. I'll take the buy. My stop loss will either be tight right there, below there, or if I want to be below that low, my profit target could be to fill right back up to there, right? And then as it's moving up, I'm slowly reducing my risk. You don't have to go to a break even. You saw I got caught at a break even 2 times yesterday, but if you want to leave it, that's still minimal risk. Okay, you don't have to go directly to a break even, but if you do, you're at a break even, and then you can start scaling out. I like to do 80-20 rule, but if it keeps going up, it might not just go up like this. You got to still respect this zone when you get there, right? You got to respect this level when you get there. You got to respect this level when you get there and continue watching what's happening, because there's always going to be moves that come up, back down, or just come tumbling right back down like this move. See how it came right up? I said, guys, we're going into 8 a.m. and look at it tumbling right back down, okay? So we figured more of our neckline now, right there. We can visually see the neckline is there now, okay? See from those bodies right there, wick, close below, drop, came right in there. So that now I know that the 5-minute volume is, they're protecting it from higher time frame from the daily, okay? And now we're moving into 8 a.m. in 40 seconds. Okay, so it could continue dropping down, or we could physically start to see like the double bottom, maybe here, coming back down. Will it respect the white line, come back down? Then if it comes back up, there's our wall. There's our wall we got to break. We could break it. Then we use this wall as a green, or down there would be better to buy, but let's just assume there. Then we could be filling back up to there, okay? So guys, you got to understand, like, you got to be patient with trading, okay? And then you also have to be disciplined. Like when I was saying, guys, if you're a buyer, you're a buyer, look at what you're trading into. That's where sometimes it's okay to, you know, take some profit, or there's nothing wrong with that, okay? But you see now, there's the wall, okay? There's nothing you and I can do if we're not in it, but we can recognize it, right? Okay, so now we're moving into 8 a.m. I know that we're 20 minutes away from Comex, okay? So we're gonna get volatility now at 8 a.m. and possibly at 8:20. We don't have any news today, high impact news at 8:30. So we don't have to worry about high impact US folder news. We just have to worry about Comex market, okay? Do you guys have any questions about the analysis in Zoom? Nicholas, did I answer the question about daily resistance zones? When does it flip bullish? When 5-minute closes above, or hourly, or 30-minute? I don't know. Where's the question, Nicholas? Oh, scroll up. Okay. Sorry, I didn't read the question. I'll read it right now. When you say you flip it to green, buyers close above the time frame. All time frames, whatever time frame you're trading, Nicholas. If you're a 1-minute trader, if it closes above zone, you correspond the zone. 5 minutes, see this 5-minute red zone? I'm not flipping it green until I see a 5-minute bullish candle confirm closure above, then I'll flip it green, okay? The reason being why we have this green hourly box green is because the hourly candles did officially close above it, okay? And then this big green zone down in here is that daily zone that we haven't transacted into as of yet, okay? And then you see right there how it came up blue, right into the red zone, and they're pushing it right back down, okay? The way how I'm trying to say this, Nicholas, whatever time frame you're on, if I'm a 30-minute trader, okay, I will see the 30-minute candles. If they close like above here, I will flip a 30-minute zone, whatever corresponding to the time frame, okay? Always respect your higher time frames, okay? This is just a 5-minute zone. It's only been trading in here for 5, 10, 15, 20 minutes, okay? Your bigger zones that hold higher time frames are much stronger because they're building. They've been building for a longer time, okay? So you see how it came down and it's coming right back up, okay? So still holding, we're barcoding blue, black, blue, okay? So it could build back out and then essentially break out of here. It could consolidate here where it's black, blue, come down black, build. Okay, so it's building in here. We're flagging. This could be a bull flag right here off of this rally coming back up. So what I mean by that, this is a rally, making the higher highs, higher lows. It could now be flagging right here and building to continue to break out, possibly retest this, and then go travel up to there. Okay? Okay, I'll remove this arrow just so we can watch where it closes. 90 seconds to go into the close. And guys, I just want to say a lot of you guys have messaged Dave and I on email, on our Instagrams, through YouTube, saying that you guys have learned a lot this week. I'm being honest saying this. Some of you guys are saying that these zones, these points of interest have really helped you guys be setting up alerts and looking for some pips. So let's continue building off of that, okay? It's just maybe 1 week, but let's see if you can do it again next week, okay? And then build your confidence and continue growing, okay? Don't throw everything out the window now that you've learned, okay? Don't become reckless trader. Don't become, just continue doing what you're doing. For those that are really have improved their learning and their trading, respect to you guys, but let's continue. Let's build, let's move into try and do this for 2 weeks. Because 2 weeks will turn into 4 weeks. 4 weeks will turn into 2 months. Then you're really going to start to see, okay, now I'm starting to understand. I'm getting confident. I'm getting more experience. I'm no longer that trader that just trades on impulse at any candle now, or I'm now patiently waiting for a proper setup and utilizing. When you take a buy or sell, you have the proper risk management. You see, guys, I use a stop loss when I trade, and I know that sometimes you get stopped out. That's the nature of the game, but I rather get stopped out of a high probable trade than just to trade any candle, okay? Then you'll have a better probability of success. George, are you calling me a clown or are you calling someone else in the chat a clown? Let me know. Because if you're calling me a clown, I want to know why you're calling me a clown. Real quick, answer that question real quick. Because I'm going to get really pissed off if you're calling me a clown. Gabe George, 5553. Are you calling me a clown, man? Am I here to amuse you? You think this is a clown, man? Gabe, answer yourself. I'm here for your amusement. You're gonna get me go Joe Pesci on your ass right now. I'm not. Who you calling a clown, man? Me or someone else? If you don't answer yourself in 2 minutes, you're gonna get booted. Gabe disappeared. Okay, so Gabe is the clown, guys. See, we get trolls and we get clowns. Okay, some groups are paying these idiots to come on here and ruin our session, but it's okay. Don't worry, you're dealing with a big boy over here. You're not dealing with someone that's going to take your shit. I'll put you in your place. I'm the coach here. I'm the teacher here. You're in my class. I'm a different type. I'm an old school teacher. I'll bring out the whip. You know that my dad used to get whipped in school back in the day? He told me a story. He got whipped by the teacher in school. Yeah, in grade 3. Then he dropped out. Yep. Okay, guys, but look, okay? It came up, lower high, This is a Tetris piece, okay? So this is a, you know, when we were saying, let's look for a Tetris piece yesterday and we couldn't find one. This is what like traditionally a Tetris piece looks like. It's a black bar and then it has like an inside blue candle, about 50%. And then you see how it's continuing to push down, okay? That's like what we say a Tetris piece. If you play that Nintendo game Tetris on the weekend, then you can see it's black, it's got a little blue bar, and then it's continuing to go down black, okay? But that's what it is. And what I mean by this is if you recognize this piece, you see it came up, lower high, came up, lower high. Sometimes they open bearish ignited and just fill. These are like if you want to trade on an impulse, as soon as it breaks that low, you recognize the Tetris piece, and that's it. You could like pip and dip out of that bar if that's what you're in, right? Okay, so is anyone surprised at this neckline, right? It's still trending down, right? Still pushing down. Still came up, lower high, lower low, came up, lower high. Those sellers are there, pushing it back down. So what we got to see is that, like that second bottom. Remember what I was saying? Here, there's the big wall that we got to break right there. And now it's coming down. Will it hold this hourly or will it come back down? Will it build its way back up? If it does, we just extend that consolidated zone and we continue to watch it build, okay? And if you want to trade like this volume, it's just going blue, black, could come back up blue, just trading inside here. We're about 10 minutes away from Comex. And then it came, now I know that white line is hourly support. So it found some hourly support coming back up with that wick. Okay, so that volume could come right back and close inside this zone. Oh, guys, indicators. I'm sorry, guys. Indicators. 9 EMA. Oh, I don't have it on this chart. Shit. I hate when it does this. Does this ever happen to you guys on TradingView where you have your indicators, then next day they're not on there anymore? Okay, I got to add 9. Another one, 200. 1 second, guys. This is going to take me a moment. Sherry, it does it to you too. It's annoying when it does this. I had all of my indicators on here. Okay, so I got to go to settings for the 9. And 9, usually I have a green line on my chart. Okay, I'll make it a little thicker so you guys can see it. Okay, so the green line here, that's the 9 EMA right here. The 200 EMA, I just got to go to my settings. 200. Style will be a purple color line. I'll make it thicker. Okay, so the 200 EMA is just right above our daily point of interest, right above that red box. We're right at our 9 EMA right here. And then finally, the daily bar indicator. Let's add that as well. So guys, you can have the daily SST daily bar indicator on a daily. This is how it looks. There's my opening price, the lowest point of the day, the big blue volume right up to there. You can see the highest point of the day was right there. Then this bearish leg that we have coming down is the daily wick so far, but it is building, okay? So we've been putting it on the 15-minute all week, so that's what I'm going to continue with. Just go to your settings, scroll up, go to inputs, and then you see how I have it on the daily. You can change that daily bar to a 4-hour, 3-hour, 2-hour, 1 hour, 45-minute, 30-minute, 15-minute, 10-minute, whatever you want, okay? So we're going to put it on a 15, and you see how it reduced that daily bar. So this is showing me how it opened from 8 a.m. and it's going to close in about 3 minutes, this 15-minute bar. So we got a 15-minute bullish pin bar, and so we're building back up in the zone. So it came down there, that was a big, and came back up. So we're barcoding blue, black, blue, black, blue. Inside here is still building. So we could continue to possibly break out bullish. Will it extend with Comex? Possibly. And Comex could bring it right back down, right? So right now we are just barcoding in here. But what we can see is it picked up some support here. So it didn't come all the way down to the double bottom. It's got higher low, picked up that hourly support. Now it's coming right back up. It's going to close in about 2.5 minutes. This is a custom indicator that Dave and I created over here for the snipers. So if you join the team, you'll get all of these custom indicators. There's a Scalper Pro. There's this SST daily indicator. There's the like a heat map that shows us the scanner that shows us what's overbought, oversold right here. Normally I had these all in my charts. It's right over here. There it is. So see here, if we're trading gold, 5 minutes is right at the 50 RSI, 15 is 45. I can see it's cruising right around here. Remember, daily was really oversold yesterday, so it's building up. I can see US30 on the 15 minutes is very oversold right now. GBP JPY is on the 5 minute, 15 minute, and 30 minute, very oversold. So if you're looking for GJ to build, you could be looking for a buy. Look, I said looking, not take a buy blindly. Oil on that 30 minute is a little bit overbought, and GU is oversold as well on the 5 minute, 15 minute, 30 minute, and 1 hour. Okay, so this can help you identify maybe a security that you're looking to trade today. Okay, so we got a really nice bullish candle coming right back up, but can we close above? Okay, it's a nice candle, but it could just come up, get a wick, and get rejected back down. Okay, so let's see if we can close above. And then you see this red zone, I base this off of the 5 minutes. So if it closes above this red zone, I'm gonna flip that red zone to a green zone, okay? And then this is a structural bar right now. See how it's engulfing everything? So if it was to close like this, this is the bar that we need to cut in half and find the point of control of, okay? If it closes above these bodies right here. And then we can wait patiently for a pullback back into that. Unless, guys, it closes near the wick, closes above, it could be a bullish ignited candle and just continuing off of this momentum, right? But we always want to try and wait for a pullback, right? Okay, so the close is in now, 25 seconds. I'm just going to get rid of this scanner because it kind of takes up some room on the chart here. You guys let me know if you want me to just click on the scanner at any time to show you guys. It's right there on our charts. Newt, just send us an email, and then we'll admin or myself or Dave will help you grab those, okay? Okay, so guys, did that close above those bars? Yeah. So real quick, what I could do is, again, what was I saying? You know, find the point of control of that. Okay, just in case we revisit this maybe just before Comex or during. Okay, so where's 50%? Right there. Okay, is there a zone off of that candle? Yeah, right there. So I'm just making a small green zone, see if we can pull back into it. Right now we're not. Okay, it's just did not pull back into this, so it's building and breaking out. Okay, I don't want to buy FOMO. Okay, I don't want to buy the highest point right now because it could just come up and then rotate back down. I want to try and buy inside here or even deeper down in here, okay? And we're 5 minutes away from Comex. So if you have rules, maybe we wait to see how Comex will open, unless you want to go in a trade 4 minutes prior to the Comex opening up. So I'll just move this zone back for now because I want us just to focus on what we see right now going on. Okay, that's a big breakout, right? So it's breaking out. Will it fill everything? Remember, this is a critical point right here. If you guys are in buys, excellent. Good job. If you guys are in buys, okay? So there's a lot of volume. These are big body candles, okay? Just this candle alone, that's a 100 pip candle, okay? So you can see now the volume is increasing 5-10 minutes prior to going into Comex. You can see how the volume is starting to increase. So that's telling me volume is increasing, volatility is increasing, spreads could be changing. So this is where if you're trading, you got to really manage your risk appropriately, okay? So this is great. It's a good move coming back up, but still we had a lot of selling pressure here earlier. Okay, well, if it pushes down, again, closes, we're looking for pullbacks. Okay, I don't want to just buy the highest point of the candle. Okay, remember, we don't want to just FOMO trade. We want to look for pullbacks, discounted, where pending orders are, right? We want to buy where there's bigger buyers. And it takes patience, right? What we always say on the calls, guys, you got to be patient. You got to wait it out. You got to see if it will pull back. Sometimes it takes a while for it to pull back. And it's a bullish ignited 15-minute candle. So it opened very strong at 8:15. Okay, so we have 90 more seconds, and then we're going directly right into Comex at 8:20. Okay, so far it got rejected now, coming back down. Where will this body close? Will I show you when I enter a trade? Yes, verbally, I tell you guys. I'll tell you, I'm either buying or selling. Just listen to the call. Just listen. I'm just trying to break down psychology prior, if I go in or not. But you will hear me, and I'll show you guys. With this thing, this is what I show you guys, okay? This, if I show you this, I'm in a sell. The blue is the profit target. This shaded area is stop loss area, okay? That's for a sell. If I go into a buy, you're going to see me put this thing on the chart. So remember, this is a buy. The shaded area is stop loss. The blue target is the reward, right? Okay. And I will verbally tell you guys, okay? You're going to hear me. Okay. So look at that big rejection that came up 100 pips right back into, look, if I just correlate it with that wick right there, now I see it's at those bodies. So that's a lower high pushing it down. So if you were in that candle, it's a nice candle to get 100 pips. It was a bullish ignited candle, but that's the situations where you don't do anything. You can piss it away. Okay. That's why I say, guys, there's nothing wrong with pipping and dipping out of the markets. Okay. But if you didn't, we still have structure below us. Okay. Now we got to see, there's the close. Here's Comex. So it's following that wick. Okay. That big rejection opened, ignited, continuing. So look at it. It's bypassing. Okay. Could come deeper, could hold, could get a wick in here. This is volatility. See what I mean? So right prior to Comex, they caused it to come up here, got all those offers, and now they're pushing it right back down. So we're right back in here where it's blue, black, still inside here, okay? So I'm just going to get rid of this. I just want to, how can I do this? I just want to, this is where all the volume is kind of consolidated in here. Sorry, guys, I just want, okay. So it came inside that zone, right into that point of control, picked up, but it's still that bearish ignited candle, okay? If it builds, remember, it can turn blue, and then it's got a big wick to fill, blue, but it could come back down, close below here, and continue to sell off, and maybe come back down to the double bottom down in here, okay? So you guys see, live, 8:15, bullish. They sucked in those buyers, rejected it, and bringing it right back down, okay? So sellers, look at the candle, how it flipped now. So it could close below here, and then we could drop one more leg down. It could pick up and come back up. I don't like trading in this zone. Remember what I told you. It's blue, black. Okay, we can continue to wait and watch. Is it building higher lows? Is the selling volume strong? So it came back down, picking back up. But you see, guys, that's why you have to have rules going into Comex and while you're in Comex, okay? Don't just trade with, I should have done this, I could have done that. Why didn't I come here? It was up 100 pips. It could have gone up to here. Guys, just look back. There's a wick. And look at, now you're like teaching yourself. See where it came up? When you place a line there, then I look backwards and it lines up exactly with the body to body. So that's why I tell you guys, it's more important to understand the opening and closing of bodies and not just wicks, okay? But guys, if I was in a trade and I took a buy or sell and I either made profit, break even, or stop loss, I would put this in my journal. This would be an excellent trade to journal. And then you go over it on the weekend so you can learn, okay, I took this trade prior to Comex. Maybe I got to learn from it, and maybe I don't do this again on next Comex. Maybe I wait for Comex to open, okay? Believe me, guys, that's how you learn. It takes one trade as a lesson, and you'll learn. You'll learn, especially when you lose money. When you get stopped out of a market, that's when you should be learning. That's a paid lesson. You paid for that lesson. It's like going to school and buying a book. If you lost $100, that's how much books cost at college these days, $100. And you lost, you better learn. You better read that book. You better read your journal and figure out why you lost that $100 so you don't lose it again tomorrow. Okay? So that's a big rejection. And look, that red zone, we're still like in that's a big FU candle. Okay, sorry guys, I don't want to swear. It's early in the morning. I know you guys got your kids around, but that's a big FU candle. Okay, it came up, those buyers were buying, the seller said FU, we brought it right back down, and now it's continued to come down. Okay, but it's still in this consolidated zone. Okay, so we're closing now in 90 seconds. Will it close below here? Then this is, they could still have a selling leg coming back down. Maybe then it fills that wick, comes down here. If it doesn't hold there, fill that wick. And then there's the daily yellow line, 4,400 on the dot. That's where the bigger buyers could be waiting, right? That's why I have a yellow line for a specific reason. But it's still got a higher low. So still got some. And then you can look at this as a M pattern. Look, up, down, up, coming back down, right? And then the big FU is a clue that they grab the liquidity up there, okay? So this could be what we're looking for continued selling pressure, unless these buyers can bring it right back up without breaking the structure. Does this help you guys understand what's going on? Tell me. Am I making myself clear to you guys, or somebody called me a clown earlier, so is the clown explaining it to you guys? And then I see it come down there, but the buyers are bringing it right back up. I'm just going to get rid of this green box because it's kind of irrelevant. We got to watch maybe the bigger structure here. Okay, so it's coming right back up. So, you know, there is buyers interested and they're bringing it right back up. This is that hanging man candle, but we still closed inside here. So, you know, it came back up. We're still in this zone. It could come up blue, and then close back above here. We could flip this zone and then buy off of it again, and then we're continuing to drive up. Okay, so this could be an invalid, right? I showed you guys the pathway, but right now it looks like it's not valid. Okay, we tried that, but now we gotta assume that it came up, came down, came up, came back down. Now it's pushing up. Okay, so if we take this candle, it's 8:25. Then we're gonna get a new 30-minute candle, right? So sometimes you just look at your 30-minute candles as opposed to just the 5s. So I see that 30-minute candles were coming down right there at 7 a.m. when we started the call. It came down, held. We came up, closed. We came back down, higher low, and we built that breakout when we broke out. That 5-minute breakout still created a 30-minute high, and it's coming back down. So if we build with this 30-minute volume, we're still building. But for 30-minute traders, you see our big neckline right here, where it's black, blue, black, right there, that red line. Where I have it. That's where if we were going to continue bullish today, we got to get 30-minute volume to close above 4,433. Okay. And that's right up there. See, this is 30-minute resistance, all of this. The 5-minute candles tried, but failed. Okay. Okay, so do we just take this candle or do we wait for it? I'm going to wait for it to close. Why? Because it's a huge wick to fill. If it was like a small wick, then you could get that firecracker, fill, and pop. But this would require a lot of blue volume to fill, then break out, right? It's a long distance wick. So you see how it came up? Sellers are still here and pushing it right back down. And then look at the 15-minute candle. It's a spin top. Okay, we got a lot of indecision right now. So it's better we wait it out. We wait it out, right? There's nothing wrong with waiting. And then we're going to go into 830. Around 9 a.m., I'm going to do a top down on US30 so we can get that chart ready for 9:30 Wall Street. And then we'll have that chart done as well. Okay, so look at that good push up. Okay, so now it came, remember it came back down. Now it's coming right back up. So this could be a blue candle that does close above. And then potentially 830 could have some volume to continue to fill that wick and drive. Okay, if we get a good closure on this bar. So it came down black, but we picked up buyers. We have a nice engulfing structural bar that could close above all of this. Okay, so this looks good, right? So sellers they brought it down, came all the way down, but the buyers are right there bringing it right back up. So we got to really watch this now. Okay, going into 830. Inducement. Okay. Yep. We're talking about pregnancy or we're talking about trading right now? Are you getting induced right now? We're talking about trading, right? You're not pregnant. I love the words inducement. Like, I thought that's for pregnancy. Is that what traders are saying these days? Inducement? Just making up names? My wife got induced. I thought you're trolling me with these words. What is inducement? It's when you're pregnant and you can't deliver, and then they got to induce your wife to get the baby out. That's what I know what is inducement. I'm a clown. So like a push, it came in and it induced that volume. We induced that volume. And this is the baby coming out. This blue volume is the baby coming out. Okay. Let's talk immigrant terms. Okay. So this was pregnant. We came down, we induced it. And now the blue baby is coming out. Okay. So all our immigrants can understand what inducement means. I'm an immigrant too, so I didn't even know it. Okay, but anyways, let's focus here. Okay, did it close above the red zone? Yes. So let's go red to green. We made a green baby right here. Okay, so we made a green baby, came out. So if we're waiting for a retest of it, we gotta wait. You gotta wait for it to come back down, and then we can look for the buy out of there. However, this is a structural bar, right? So we can cut it in half. Because if it's just like a shallow pullback, okay? So it met that 200 EMA, that purple line. We're still below this wick. Now it's coming down. So let's see if it will respect this zone and maybe if it catches. Now, this is a breakout candle with confirmed volume. Now it's coming down. So let's see if it will retest. This is a retest because this could be a black candle coming and getting rejected. And then it's a fake out candle. So right there at the 50%, see how it picked up that wick? Right there. So it picked up some buyers. So the candle should traditionally flip. It's got a short wick, then to fill to that red line and fill higher. But right now it's coming back down black. So it's right back down there again, a second time. It's still holding, okay? And this is a new 30-minute candle that just opened. Oh, okay, awesome. Yellowstone, thank you. There's the technical definition of inducement. Inducement refers to a tactic where the market, often driven by large institutional players, lures traders into taking positions in the wrong direction, usually right before the move. There's the technical definition, guys. So it's not about pregnancy. Okay, so we came back down. It did retest. Now, if the candle builds, at least we have confirmation and a retest. Still, we have 3 minutes to go. It's still building here. But we do have Japanese terminology, harami, That's where a candle opens inside a body, and that's where the Japanese saw it as a pregnancy, where that candle inside is a clue. And we can use now harami with pregnancy and inducement now. So you can see maybe the Japanese were thinking about this 200 years ago when they created this terminology of these candlesticks. Maybe females understand it more than men. Harami is a curse word. There's words for everything. Okay, so we got 2 more minutes to go into the close. So it came down black, black, black. Maybe some of you guys got filled. Maybe you guys are in pending orders. I'm waiting to see if this candle will flip. Has not yet, still holding black. Where's my TP? I'm not in a trade right now. I'm not in a trade. I'm just waiting to see where this bar is moving. Guys, hit the likes, subscribe to the channel. We do appreciate you. Thank you guys for joining in. We have fun, educational, entertaining sessions together. We learn about pregnancies. We learn about inducements. We learn about Japanese pregnant candles. All of these things. Okay, so we see the black candle coming back down. Okay, so it's coming back down with now 20 seconds to go into the close. Okay, so this is where it could barcode. It could be blue, black. Next candle could open blue again and then be the breakout candle. Otherwise, it could come back down black, black, black. And maybe a great buy would be back down into this hourly area. Okay, but it's still holding up here. It could flag up here. Okay, so this was the first 5-minute candle of the new 30-minute candle. So far, it's bearish. And here's the close, right at 50%. When I cut it, there it is. So now it could be black, blue, black. If it comes up and gets lower high, it's going to come deeper down into here, back down into this green box again. Okay, and our 15-minute candle has some bearish volume on it with 10 more minutes to go. Oh, this flag right here that's on is from the SST daily bar. It's set at 0.5 of the entire range of the 15-minute. Let me just take it off because I see it's in the way. So let me just go to settings, scroll down. See, it's checked on that. Sorry. Okay, there we go. Okay, so you see kind of wall right there coming back down. So that's what I mean. That was a big wick to fill. It had to fill. It didn't, okay? So now it's coming back down. We're still seeing, can it build here and hold? You're buying now? Okay, there's nothing wrong if you're buying now. You're buying on retest, that's fine. Just use proper risk management. That's it. That's all I'm saying. There's nothing wrong. You're getting retests. It's pulled back. So that's okay to look for buys. I might as well look for the buy off of this myself too, but just maybe wait it out, see how it's continuing to build. We're in this, it's in this flag now. You see where it takes 2 bars to consolidate a range right there. Okay, now it's building. Okay, so this could be the candle that builds and breaks out, right? Okay, so it's now blue volume, black volume, blue coming back in with higher low, respecting the zone, still building in here. Okay, so this now could build and break out. There's short wicks, and then it could fill up to that previous wick and get up to that red line. Okay, so, but let's see. It got rejected again right up there. Now it's coming back down. So we got to see if it will maintain this blue volume to continue to come back up and break out. There it is. Okay, so it's coming right back up. Can we now break out? That's like a 3-bar play, still holding above 50%. Okay, so it's blue, black, blue. We're trading at that daily point of interest at that yellow line. I can see it there, that 4430. Okay. Okay, so we got a good candle building with 2.5 minutes to go, building nicely. Okay, but this is where, okay, so there, breakout. Okay, let's see if it pulls back now. This is a good breakout candle, so that's perfect. That's a Tetris piece. Blue, black, blue, continue to break out. Man, I wanted to hit the buy trigger. I didn't, so I have to wait for a pullback. Okay, but if you're in a buy, the job of this volume is to continue to fill that wick and break out. Then get up to the next wick, the next high, like right around there. Get up to 4438, okay? Because then we have our yellow daily point of interest. If you're in buys, congratulations, that's perfect. That's great. That's what you want on that candle. It filled and it's popping, okay? I was gonna hit the buy on that, my goodness, I didn't. But everything is holding structure below us. Nothing broke down. So that's why I said, when you asked me, you're buying down in here, I said it's a good buy. It's good buy. Everything is retesting. It's holding. We're back in that flag. So it was a good location. Who bought on Mr. Hope? That was a great buy, sir. Good buy. Sherry, you bought it too. Nice, nice, good. Those were good buys, guys. See how it held the zones, nothing broke. We got equal bottom lows. I wanted to buy that. I failed to hit the trigger, guys. Sometimes I'm talking and I fail to do what I got to do. But that's good, guys. Good. I see a lot of you guys bought, even you guys in Zoom. Lee, you got it. Okay, good, guys. Good. Okay, so that's a big candle, right? Like from the breakout, I'm just talking from the breakout. Coming all the way up there. That's a nice 65, 70 pip breakout, creating the higher high, getting up there. But we still have resistance here. And then that yellow line is our daily point of interest, okay? That doesn't mean for us that did not buy, that we just jump in. We can wait for another pullback. This is a nice big candle. We can maybe cut it in half, wait for a pullback. That's okay. Okay, but what we got to see is it did create a high. Now it's coming back down, closing. Here's the close. So black already, okay? So can it come down further? And then you see the 200 EMA and that 9 EMA are starting to converge together. This could be potentially where we get a golden crossover. If this 9, the slower moving line, crosses above the longer one, then it could continue to extend this rally up, okay? So this would be a good area to potentially buy a pullback, like right around here, 50% of the candle, right located near that 209 EMA down in here. Okay, if it can come back down to that yellow line, 442829 or 4430, that would be a good pullback buy. Okay, but it might not pull back to us because it's got enough volume and wants to continue to break out. Okay, but right now it's an ignited bearish head on the top of this candle. So you can see they're not allowing it to advance. So we got to see, can it come down? It just came down, picked up a wick, could flip and continue to go. So you know, we might not have an opportunity to get a pullback right now. It just might want to continue to move. It might pull back after 10 minutes, 15 minutes, 20 minutes, but this rally might continue moving now. Okay, so it broke out. Remember, this volume, its job is to fill that wick and continue to drive. So you see, it did not come back to retest this location. Wow, I see some of you guys bought. That's excellent, guys. Okay, and you got the volume cooperating right now with you. Okay, so you got a higher time frame candle. You have the higher lows, continuing to build higher highs. Next area has to fill is right here. Okay, we can go backwards right there. You're looking about 4438, and then we really have to respect the yellow line up there, 4443, right up there, okay? So it's continuing to move. This doesn't mean, guys, that we cannot buy any pullbacks today, okay? The markets, we know, go up, come down, go up, can come back down. This would be a good, I'm putting an alert at this yellow line right here. Okay, so if I get a pullback coming back down to right there, that's where I like to buy to take it back up. Okay, and then I know that this green zone is a better, deeper zone. Okay, so I'm not in. Some of you guys are fantastic, but I got to wait for a pullback, right? I personally don't want to get in right now, okay? Because I don't FOMO trade, guys. I don't buy the highs because just look in the back here. If you bought the high, you suffered drawdown. If you bought the high, you suffered drawdown. So again here, if you buy the high, it could potentially pull back. That's why I said, guys, I'm waiting for a pullback in here. That's you got to be disciplined with your trading, okay? I'm sorry, guys. I know it sucks on a live call, but you got to follow some sort of rules in trading. I feel like I missed the move. I missed the move here and I missed the move on this candle. So I know that I'm behind, right? Knowing that I'm behind, I'd rather just wait here for a pullback, okay? Because look, if you bought up there again, you're in drawdown now, okay? And some of us are waiting back down here for a potential retest, right? There's nothing wrong with that, guys. I know it sucks for a live situation, but rules are rules. If you didn't get in, you got to learn how to, do we not say patience and discipline 10 times on every single call? Like we say it, but we mean it. Okay. And then for you buyers, you gotta have rules too. Like right there. Remember I said the red line? Look, there's a wick there. There's a wick there. There's a wick there. There's a wick there. That candle came right up in there, right? And then there's another wick in there. Okay. So this candle is going to close in 30 seconds. It could ride right back up that wick and drive. It could close below here, then we're below, again, the structure of these bodies. Then another black candle could come down and meet the buyers that are patiently waiting down here. And that's where we could potentially get that golden crossover, or it could just be black, volume tumbling right back down, right? Guys, just understand in trading, there's always going to be another trade, okay? I can tell that you guys are, when I tell that you guys are FOMOing, I can tell your experience as a trader. I'm not saying that to disrespect. I'm not saying that to be mean. I'm just saying I was there too. I understand what it's like. I know too. You want to chase a trade, but that's not what you got to do. Okay. You got to continue to wait it out, right? The candle opened bullish ignited. So it's still got bullish volume. So I know that it's opening bullish. It could potentially continue to fill that wick and continue to drive. Okay. But if you're still waiting down here, you still got to wait down here. There's, I can't pull the market down here. The market will come down when it wants to, but it's still ignited. It's still continuing. So if you're still holding the buy, you have your candle that you're looking for. It's a bullish ignited candle. Its job is to continue to fill that wick and continue to break out. If it breaks out, then this is a yellow line, okay? So yellow line is a daily point of interest. And what it's doing is, remember, this is my point of control, right? There's the bottom, there's the middle, and there's the top right there. So this yellow is a higher time frame point of control right at that level, okay? So this yellow line holds more weight than this red line or this red line, okay? But it is doing its job. These buyers are strong. New 15-minute candle at 8:45 is opening ignited and continuing to be bullish. Okay, so that means, guys, I'm waiting in here. Now more pending orders are continuing to fill in this area. So the longer I wait in here, the more pending orders that are filling in here. So eventually, when it does come down in here, maybe there's more orders to pick up here. Then if we buy that, then it's got the volume needed to get through, right? And then this is what I do, guys. I wait all day. I'll wait all day for this volume to come back down into here, okay? A lot of traders don't understand that concept, okay? So a simple alert helps you wait there all day, whether it comes down in the next candle or in the next 30 minutes, next hour, maybe at 11 a.m. or 1 p.m. I'm waiting there. I'm going to wait there with those orders because it has not transacted back in the big breakout from 8:30. Chris, you waited 5 hours yesterday for a NASDAQ sell. And Chris, how did it work out for you? You waited 5 hours. Was it a successful trade? Or did you get stopped out or break even? What happened? You got out early, but it was was it 430 pips. Okay, so you waited 5 hours for the market to pay you 430 pips. That's like a payday, right? So you get paid in trading by waiting. You don't get paid in trading by just impulse trading. Lerden, all the way from Bosnia, Kakosi. My Bosnian brother, welcome. Oh, you took 100, but it went 130. Okay, then that's review. That's review. Look at the structure of the candles. Did it continue to build above 50%? You know, just now it's review time. But what you should learn from that, Chris, is waiting. You patiently waiting helped you get into that profitable trade. Okay, now you got to dissect the trade and see, why did you get out so early? Could you have done something better? Was the volume building like this, where it's, if you draw a line, cut line 50%, continues go. If it hasn't came back down, this big body candle, if you cut that in half and it continues to go, you can continue to have a trailing stop loss and continue to move up with it. Samuel, you get out trades way too early. Okay, everybody does have rules. Okay, guys? Then if you're getting out trades too early, then you have a scalper's mindset. Don't have a scalper's mindset. Hold the trade longer. If you have a stop loss set and you're not over leveraged, then let the trade play out. Okay, that's the only way you guys can get around that. Same with me too. If I get in a trade on this call and I want it to play out, you probably won't see me go to a break even. I'll leave my open stop loss and let the trade play out. Okay. You just got to tell yourself that ahead of time when you take the trade. That's it. And let it play out. As long as I know if it comes down and stops me out, it's not the end of the world. I'm not blowing up my account. It's a small loss. I'm okay with it. I can let trades play out. But you got to set the rules when you take the trade. Don't make it up as you go along, because then you're going to confuse yourself. Try it next week. Just try it. Test yourself. And see, maybe you're going to fall in love with that strategy. Maybe you're going to hate it. Like I hated it before, because markets were not trading like this years ago when I started learning how to trade. They would go up 20, 30, 40 pips and then come right back down, right? We weren't getting these 300, 500 pip moves in 5-minute trends. So I had to learn how to pip and dip. Right? I'm changing my style of trading on these calls too. I'm actually holding now for 100, 150, 200 pips. Yesterday, I got into that trade with 160 pips and it hit me out at break even because I was trying to hold it for longer. So I'm changing. I'm adapting the way how I trade myself as well. Okay. It's not easy, but you got to work on your craft. You got to work on your skill. Everybody does. Okay, doesn't matter experience levels. It doesn't matter what security you're trading, nothing. You just got to work on what works best for you. Okay, so this is still a long, look, now we're getting to that daily point of interest. Okay, and it's still going. This is a trade where you can cut these bars in half, cut it in half, trailing stop loss. This candle had no wick and it just popped and exploded. Filled right up to that daily point of interest. You could have like a trailing stop loss, 50% falling. All of this could be trailing behind. That's up to you, okay? But you got to know that if it comes down, you get tapped out and then it could continue going. If that's not what you want, then let the trade play out. But you got to have some, where are you playing it out to? Okay, that's the thing. Are you playing it out all the way to it's going to come to the highest point of the day? Are you going to play it out to here, the next daily point of interest? Do you guys, I have targets when I'm trading. Some traders just let it play out and see what the hell happens. Okay, that's fine if you do that. I don't do that. I trade from here to there. Me as a scalper, okay, I know that this is a daily to daily. That's a big zone. Measure it. That's 150 pips, okay? But I still see how the 5-minute candles were transacting back here, okay? There's the big blue candle. If you cut that in half, it retraced down, right? All those patient came back down, came back up. Then it came back down. Look at where it was. Red line was support, support. Close below. There's the drop. So if it comes up now all the way up to that red line, and look at the number, 4450. I respect that red line, right? Some of you guys don't, right? Because you guys are just looking to cut through there. But me as a trader, if I'm taking a trade or it's in longs, I do something there. Okay, I'll either reduce my risk, have a trailing stop loss, because I know from this yellow line to that red line is 80 pips. Okay, that's what I look for as a scalper. And I respect my 5-minute analysis because I'm just trading the 5-minute frames. But if you're in a 30-minute, 1 hour, this is irrelevant to you. You're looking for higher, bigger moves. And you see, guys, there's not like when I'm waiting for a pullback, there's nothing I can do against an ignited bar. The volume is there. It's pushing. Okay. So the only thing I can think now is I have an alert to buy here if it pulls back, or I have to sell either here or here to push the move back down there, right? Mo, thank you for the donation, but we don't need donations here. We haven't had this donation in a long time. I said this before. We appreciate it. We really do appreciate it. Thank you. If everyone can shout out Mo, a $5. He's gonna pay for my coffee today. Thank you, Mo. I appreciate you. Shukran, Habibi. But you can pay us, guys, by just subscribing to the channel or liking the channel. That's a payment for us. Thank you, guys. But Mo, thank you, bro. I appreciate you. That's very nice of you. Thank you. I will get a coffee. Thank you. And guys, another thing is we are moving into an hour. Okay, it's moving into 9 a.m. So we've had a very nice, if you've been in this, very nice bullish move. But 9 a.m. could change momentum. It could continue with bullish momentum. That's why you got to have a look at your hourly candles, okay? Because you're following this massive hourly candle. But you see, now we're trading at a daily point of interest. So the hourly volume has made its way to a daily point of interest, and it's finding a little wick there. So there is a rejection. So the next hour could continue to fill that wick and drive. It could pull back. Maybe it pulls back into 50% there and then finds us waiting, and then we buy up that wick and then take it back up and drive it. But that's what, you gotta be looking for if you want to continue buying or selling, right? So am I surprised that there's a wick at that daily point of interest? I personally am not surprised, right? But it could do exactly what this did. There was a wick, came down, and then it came right back up, okay? So there it came up, rejected, it could come back down. Again, I'm still waiting down in here for a potential buy. It's not there yet. And sometimes, guys, markets can move, like from one yellow line, like here, yellow line, yellow line, yellow line, to the yellow line. And then they could move back down. I'm looking to move back down, maybe look for a buy here at 4436, a buy here at 4433, but the best buy would be here at 4430. And it's still holding. It could fill, and continue driving, just like here. It came down, shallow pullback, and it filled, continued, and broke out. It could come down and it could fill. But the yellow line is a more significant higher time frame, okay? It's not a 5-minute resistance. It's not an hourly resistance. That's a critical zone right there. If we go to the daily, let's just recap where we got that from. Okay, so where did we get that zone from? So this is a recap for everyone. Remember, we cut yesterday's bearish volume. We cut it in half. That is exactly 50% of yesterday's volume. Okay, remember we broke through it earlier and it came back down. Now it's filling back into this red zone. So there's the top, the middle, and the bottom. So right now in the 5 minutes, you know what you're trading into. Okay, This is from that daily volume yesterday, okay? So you see, this is the bottom, this is the middle, and this is the top, okay? So we're trading right back into the midpoint, and they're pushing it back down now, okay? And now we're moving into 9 a.m. in the next 3 minutes. Okay, so we found a top, okay? This could be like where it produces a double top. This came in, could find some buyers, come back, could be a double top, then it drops down into here, right? And that's where the bigger buyers could be pending, and then they pick it up here and bring it back up. But if it comes down with double top, bigger volume closes below there, then it could continue to sell down to there, right? Okay, it could just flag inside here now and continue with another bull flag and continue to break out at 9 a.m. Okay, so if you're still in buys, right? There was a bull flag here that broke out. There's a little flag there that broke out. This could be another flag that continues to break out. But we still have to now really respect the yellow line here, okay? Does this analysis help you guys at least a little bit to understand the picture here, what we're looking at? I know it looks confusing. There's a lot of lines, but I want you guys just to understand we're trading right back into 50% of yesterday's bearish volume. So whenever we're talking about the higher time frame, we're talking about yesterday's volume. Right now, it's beautiful. We're moving on a nice 5-minute uptrend, but we still have a lot of selling volume behind us, right? You can now move this red zone right there. And you see how it held? It was a zone there. It was a zone there. It was a zone there. So that's what I mean, guys. This is more higher time frame now. Okay, we're trading here Thursday right at midnight, Friday early morning, all of London session. So we're retracing right back. If you want to do a complete retracement with your Fibonacci, grab your Fibonacci tool. From the highest point of the day right there, we can see the high, drag it all the way down to that low wick right there. And this is the retracement coming right back up, right to 0.5. So we're right back to 50%, and there's the 618. So we're basically right at, from this high to this low, we're coming right back up to 50%, and then the sellers could come in and continue pushing this thing down. Okay, that's how retracements work. And now it's going to close right now in 15 seconds, and we're going into 9 a.m. Okay, so as a buyer, you have to be disciplined here too to accept some profit, right? Because it could come back down. You know, we've seen staircases going up and elevators coming down. Okay, now it's blue coming back up. If it does its job and goes blue, blue, blue and fills the wick, and it could continue holding, right? We know that. But if it gets pushed down, okay, now I'm looking for like more, if I'm looking lower highs to see if they push this down, a double top. If that blue volume breaks through and closes above, guess what? I'm going to change that red box to green, and it could continue to fill back up. Then we could be flipping. Now the hourly volume is coming in. So buyers can continue to extend this uptrend, right? So now it's trading right back into here again. So it came up, back down, 9 a.m., still strong volume coming right back in. So it needs to continue to fill that wick and produce a new high. If it gets rejected, it could come back down. We're still in this flag. It's a bull flag. So it could still continue with that bullish volume. So if you're in buys, it is still technically holding, but let's see how it moves here. Guys, I just need about 5 minutes to do a US30 top down, 5 minutes. So I can continue following gold with you guys. But it's still bullish. Lee, you made 2 profitable buys on gold, made 0.7%. You are done for the day. Amazing, Lee. Congrats, bro. Congrats. That's amazing. That's all you need, Lee. That's it. You hit your targets. You did what you had to do, and that's it. That's a beautiful trading day. You did your job. Congrats. You clocked in and you clocked out. Lee, I'm very proud of you, man. From the bottom of my heart. I know how hard you've been working on this, Lee. Thank you. That made my day right there. Honestly, that made my day. I'm proud of you guys. So there's the double top, came up, back down, lower high, coming down. Okay. So if you don't want to sell this leg down, that's fine. Didn't we say the whole time we were looking for potential buys in here? So the market could be coming down now, right? But If you're not in a trade, just continue analyzing. Remember, we're looking for good setups, okay? So we can see we got some big sellers at the daily yellow line coming down. It could come back up. What about that, okay? Just got to make up your mind what you're doing here, okay? It's still in the zone. It came down, coming back up. Will it hold? Volatility, 9 a.m. I can see, that's why I put heavy emphasis on the yellow lines, right? Higher time frame, daily as opposed to a 5-minute. This is a white line, this is hourly, but I put more emphasis if it comes down to that yellow line. So don't always think in your head, guys, the market will never retrace. The market will never return, because there it is. There's the return, okay? So can it come all the way and tag into this green box? So far it came down there. It's picking up some buyers, but it's still got that bearish volume, okay? Let's see what type of, how it closes, how low it goes. See, sometimes they come down quickly and then they fill and then they just come right back up. You remember that sell we were in yesterday? It dropped 160 pips and in 30 seconds came right back up with that return wick. Okay. Sometimes then it will come back down. But right now it just came down in there, and it's returning right back up. So if you didn't hit the buy button on a market execution, sometimes so fast, maybe you're waiting with a pending order. But if you're not in, at least I'm analyzing what happened. It came down, picked up those buyers, now coming right back up. It's a big spin top candle. There's a lot of range on this candle where it opened blue, blue, blue at open, came all the way back down black, coming back up with buyers. It could close right essentially where it opened, and then we got like a coin toss where it could continue to come up or it will continue to come down, okay, in the next 30 seconds. Amazing. Simon, you scalped 30 pips because of the drawing. Okay, so guys, if this charting helps you guys, that's perfect. Then I know it's helping you guys, okay? So it doesn't always I have to be in a trade with you guys. You guys can use this analysis, understand. I'm explaining to you guys what these levels are. If that helps you guys with your trading, someone told me the other day, Ron, I just listened to you in the background while I'm trading. That's fine. Okay, that's great. Thank you. So it closed with black volume. So it may continue to push down. Now you see the range is really opening up. Look at the range now, okay? So the range is getting bigger. Now the range is from here to there to possibly, now you see the zones are getting bigger now, bigger volume coming in. We're moving close into Wall Street. So a lot of these red lines inside, I can kind of get rid of these. There's another tap. Okay, so it tapped. That's a good, I'm going to go in a buy. It tapped 2 times here. I'm in a buy. Okay, I want to see if it can continue to come through here. Okay, so it came, I waited patiently for a pullback. I got the pullback. I'm in a buy now. So I'm just going to place my stop loss maybe below that green zone, those 2 wicks. Okay, so I'm putting my stop loss right there, below there. My reward, I'm looking to come back up to that daily and maybe break for a new high and travel up to there. I'm in a buy now, okay? On this call, I was physically waiting for the pullback. Maybe it wants to come down lower. I don't know, okay? But I waited for a pullback, okay? So I got my pullback. I'm in. Now I got to finish off the volume, how it closes, okay? It didn't tap the yellow line exactly. Now it's coming back down. So I got to see, it's going to break. I'm in drawdown, right? I want to see if it will come deeper, but it could be now heavy selling pressure coming through, okay? But let's see if we can hold this 4430. That's what mainly I want to see if we can hold this yellow location down in here. So reason why I bought, there was that bounce. It came back up, came back down. It opened. It was another wick and then came up. That's when I bought, okay? There was 2 supports hit, okay? But there's a lot of selling volume still pushing it down. So
We got to see if we can hold this, continue to hold it and build and ask, trade blue, close. Maybe we'll get an advancement. But if these sellers keep offering and bidding it down, it could still have that bearish leg coming down, okay? That's why my stop loss is below there, because I don't want a big, huge black move coming through, and that's my maximum risk, right? So there is, you can see it's just bouncing off of this location. So it is grabbing pending buyers. It's just not closing or pushing up strong, okay? Because there's a lot of selling volume coming down from that daily point of interest. Okay, and 2 more minutes to go on the candle. I'm in a buy, guys. It's in drawdown right now, but in a buy. Okay, so we came back to the opening balance. It's a spin top, right? It could close like this, and then we just, maybe we move the consolidated zone down into here now. Okay, but it's still holding technically, okay? But, could pause here. Will it rotate back up, or sellers could push it right back down, okay? The candle still has 90 seconds, so this candle could change entirely, okay? What we got to do while we're in a trade is just continue to watch, manage our risk. Okay, so it came back to the opening balance. It was blue, flashed blue for a second, came back down black, again flashing blue right at the opening balance. We still have volume above the 9 EMA. We tapped the 200. We're still holding. We're above the daily point of interest. We caught the pullback. Okay, so if I get stopped out, I'm still okay. Like, I waited for the pullback. It's been holding, but there's just so much selling pressure still coming down. So if it closes below here, I can close the trade and accept my loss, this loss, and then not even allow it to come down and tap my stop loss, because I can see that sometimes, have you guys ever done that where you don't allow a trade to come all the way down and tap your stop loss? Sometimes if you see it's not working out, like right now, I've seen for 4 minutes on this candle, it's not working out, okay? So there's nothing wrong with closing out a trade earlier, and you don't have to wait for it to tag your stop loss, okay? So it's still bearish coming down. It's a heavy, heavy bearish 15-minute candle, okay? So it closed now right at that yellow line, okay? So even if we make our way up, we got to get above that 50%. So now it's coming down, okay? This is where it's deeper now, okay? So they broke the daily point of interest. I'll get to the US30 top down in five minutes, guys. I just need 5 minutes. I'll do a quick one like I did yesterday. I just want to see if it will pick up anything right here. Nope. It went to pick up buyers, but coming for stops as well. Okay, so my stop is just below those equal lows right down in here. I'll physically tell you guys when I get stopped out, okay? Good return wick in this zone, but again, you see the candle's not flipping into a bullish pin bar. It's not flipping into a hammer. We're not getting that blue volume, so it's still black. They could still push it down, but here's the supporting zone so far, okay? So they broke those equal lows, came down, the bottom of that zone, picked back up, okay? I'm still in drawdown, still holding it. But if the volume closes again above the yellow line, then we know that they picked up good volume below the daily point of interest, still holding the 5-minute structure. Just need to get a good closure. Even if it closes inside here or closes above, we could build, then I can get back to maybe possibly break even. But maybe we're seeing where they're forming the neckline. It's more in here. But we need good volume to now close, to push up this 15-minute black volume, okay? So again, it's still lower high. So that's what I mean. We got to see blue volume closing above 50% of one of these black candles in order to continue to build and crawl our way back up. Had you had an order in the, remember, deeper is better, right? I tried off of this when it had those 2 wicks, and you see I got too early. If I waited a little bit more deeper, it would have been better. But that's why you gotta have a stop loss or understand where to place the stop loss. That's it. And now I gotta wait for this closing volume. Because it could still come right back down, break that, and tap me out. But gotta watch how it's still building. Still holding that daily yellow line. That's important too, okay? So it still has not, if it closes below that, that's not a good sign. Then this will turn into resistance. Then it could continue to crawl back down that wick and then break, okay? Then I'm out of the trade at a loss. Nope, 4450 coming market open. I don't know if I'll be live to see it, but I hope. Okay, so we got a bullish pin bar on the 5-minute. We still have a bearish 15-minute candle. We're going into a new 15-minute candle in 1 minute. Okay, and then we got war continuing. US-Israeli air attacks target steel plants in southwestern Iran and in the central city of Isfahan. So got war continuing. I thought that they were going to have like a 10-day ceasefire. I guess they're not. No one's following any rules, not even me on my trading here. Man, come on, close above this 50%. Let's build off of this. Because I don't want kind of like a consolidated flag and then it will continue to push down. That's what I don't like. That last second push down. And just to let you guys know too, even pullback trading, even if you're patiently waiting for a pullback, sometimes they don't work out, okay? You got to understand, they don't always work out all the time. Okay, so we closed, again, right at that daily point of interest, right at that yellow line. I would have loved if we could close above that, but we still closed there. It is blue, but again, we got job to do as buyers. Got to fill that wick and continue come up. Because I know when it comes up, it could be a lower high, and then they push it right back down, okay? So each candle has a job to do. Okay, so this one's opening back up blue, but still has to get above this wick. Need to drive back up to the point of interest of where this bearish one opened. That's where I entered in early, guys. Suffered the drawdown coming back up. But we're right back in this consolidated flag. Okay, so, you know, we got to continue following the volume, right? That now, guys, look, this was the better buy. The better buy was deeper at these equal lows, okay? It wasn't here, it wasn't where I entered, it was down here. So if you waited patiently and caught that, you got the come up and you got the extension. So you're laughing. You didn't have to suffer any drawdown like me, okay? But that doesn't mean we're done. We're jumping up for joy right now. We have a job to do, okay? We still got to close above here, you know, like, because this could come up. We're still fighting against selling pressure, and it could come all the way right back down, okay? So let's continue to follow this. I'm at break even right now. So it's at a break even, but I didn't take this trade just for a break even. But sometimes mentally, psychologically, if you're suffering drawdown and you come to a break even, sometimes if you just close the trade, no win, no loss, then you can regroup. You can hold for a better entry or whatever it is, okay? Some traders do that to regroup, but I'm going to see this thing play out. I like the uptrend. I like it. I just don't like my early entry. That's my critique. My stop loss placement was okay, right below those lower tweezer bottom lows and below the green box right there. So I learned something about my stop loss. I got to learn more about my entry. Okay, but let's let the candle volume do the talking. Okay, so we're filling that wick. Okay, I'd like to close above this zone. We have a nice, see where the support is being built now? Body, body, body at the yellow daily line. So it looks like they came down to grab some liquidity down there. Okay, maybe hit some pending orders, almost my stop loss. Coming back up. This is like a pattern we recognize, right? Coming back up. It might come back down. Then we look for another supporting bottom, okay? What do you guys think? Do you guys think we can push with this, or sellers might have more momentum to push it down? We have a strong 15-minute candle building, but we're struggling right here. Okay, so we created that high. That's good move, right? If we can close above this red line, that would be fantastic, because then maybe we can engulf a few bars and then make this support and then continue to fill up to the highs again, that day, back up to 44, 43, 44, and see what we can do up there. And guys, just learn, look at how the volume is maintaining at that yellow line. Okay, so that's good for education. Daily point of interest is holding it. Yes, the 5-minute, but they drew liquidity. They came down for bigger pending orders. Okay, but still positive move. Good 60 seconds. Let's close. If we close strong with this candle, and then this is a nice candle to cut in half, because if it pulls back, we want to hold the point of control of this candle, catch another higher low to continue to take us up. If we close right near the high, the candle could open ignited and we're continuing to fill. Okay, I would love that in the situation in a buy. Okay, but I know that candles could come back down to retest, right? So I'm already visually looking where 50% could be right in here, right above this control zone, this right here. Okay, so we're closing in 30 seconds. We have as bullish of a candle that we want. Okay, is it pregnant? Yeah, this one got induced. Okay, so we induced and we got a big baby coming out. So, yep, we induced, and here's the result. A big blue baby is coming out. A 12-pound blue baby. So big baby, okay? Now, that's a good candle. Okay, let me just get rid of these red lines. We're gonna now just look at follow, guys. It's ignited a little bit, can fill that wick and continue driving. But what I'm doing is I'm working our zone in case we pull back, okay? You guys continue following the candle. It's ignited, driving. There's 50%. And if we do pull back, we're looking to hold point of control right here, okay? If we do pull back, we're still in the money, okay? Let me just get rid of this neutral one. Okay, so that's a pullback zone right there, okay? But we got a strong blue candle, but it's filling. So we got to fill back up to this red box, but knowing it could come down, okay? Because that's a double top, okay? Visually, up, down. We found our zone coming back up right there. They could push us back down. Then if they push us back down to our entry, like where I entered, sorry, some of you guys entered lower, but that's where we could pick up to break out. I'm hoping we don't need to come down here. I'm hoping that this is enough volume that we get a 20-pound baby breaking out of here. Wow, boom, you waited for the deeper zone? Man, 80% off, your daily goal done. Nice, boom. You got that entry, bro, but solid. I'm happy. Oh, Jerry, when you gave birth, your son was 9.2 pounds. Wow, that's a big baby. Both of my kids were 6'11", 6 pounds, 11 ounces, both of them. That's a big baby, 9-10 pounds. My goodness. Hopefully we can get a 25-pound baby coming out of here, but we got a big wall right here. Okay. So guys, I didn't measure this from my entry. Some of you guys are deeper, but that's about 70 to 80 pips to come back up to the red zone. Now, okay, I don't like this. Okay, that's the rejection. Now it's coming back down. So that's why I drew that green zone for us. Can we hold the point of control? If not, if we can't hold this, it's going to come back down and test the daily point of interest, the yellow line, the deeper line where we built that support, okay? I haven't taken any profit out and I haven't adjusted my stop loss yet, okay? I want to see if this thing can play out. Guys, I have not done US30 going into Wall Street. So I'm in a trade right now. I know it sucks, but I got to stay with this. I know we're going to miss out on US30 on Wall Street. Okay, so you see now it's pulling back into that point of control. Okay, and that's a double top. Like it came up, back down, double top, coming down. Okay, so man, if we can't pick up some support here and push this thing back up, it could come all the way back down to this. And if we don't find these buyers here, then unfortunately this big black volume and going into market open could come down, take out that wick, and then I'm getting stopped out. Okay, so I tried to hold for a bigger move. I know my rules. I failed to follow my rules there. Should have taken my stop loss to break even. I didn't because I'm getting excited for a bigger move and the market is coming right back down. Okay, if you don't follow your rules, this is what happens when you're trading. Are we trading gold? Yeah, we've been trading gold trading and analyzing gold this entire session, guys. You see the watermark in the back? XAUUSD, gold. Nick, you got your 100 pips? Good for you. Good for you. I think I'm going to get stopped out, guys. I'll verbally let you guys know as soon as I get stopped out, but my stop loss is just below this wick where it originally was. But this is some heavy volume coming down because we're going into now Wall Street very, very soon. So I don't want to be part of a massive black drop. That's my maximum risk in this trade. And we'll see what happens here. Vinny, nice one. Oh, you got the sell. Nice, nice. Good. Secure some profits. Okay, so we got a wick again at that daily point of interest, but it's a big, heavy black candle. We have an inverted hammer on the 15. So if it builds back up, it could build its way back up. It's good support. That's where I want to see the buyers supporting that yellow line. Okay, if I'm looking for support and drawdown, that's where I want it. Okay, but I know it's, oh, that's it. See how they closed it right down last second? Okay, so it's going to retest this. No wick, black. I'm going to get stopped out. Watch. If this is not a blue ignited candle coming back up, see how last second they closed it below? And all it needs to do is just get rejected, come down. That's enough volume from this black candle to fill that wick and stop me out. Unless we can come up blue and continue to fill. Okay, but did you see how we came up with a wick? We were right there. Last second, they closed it down black. And right away, we're getting picked up by some buyers, but we're trading against heavy selling pressure. So this is because the volatility going 5 minutes into market open. And I'm trading with a very, very tight stop loss, guys. Okay, so I will verbally let you guys know I'm still in. There's still some buyers, but that nasty rejection is going to take me out. Watch. This is market volatility. I don't like being in a trade 5 minutes going into Comex, NFP, FOMC, Wall Street market open because of this shit. It's too volatile, but I'm in the trade. There's nothing I can do. Okay, so just got to watch my stop now. And this can go either direction. It could pump right out of here or it could just dump right down. Okay, so it looks like it's going to fill and dump. I didn't like that. I knew as soon as I saw that black candle close and that rejection, it's pretty obvious what's going to happen here. So I'm just below this wick, guys. I'm just below here. That's it. Stopped out. Man, I hate being in trades going into market opens. I honestly, if you guys know me, I hate that. But this trade was taken earlier. It was at 10 after 9. So held that trade for 17 minutes. But It came back up to some profit. I didn't do anything, but that's how the cookie crumbles. Okay, so clean up the zone. I got stopped out. What are you going to do? You're going to cry. You're going to do this. You're going to do that. No, you got to get focused again and look for another trade. Okay, so I have about 3 minutes. What I'm going to do is real quick to US30. Guys, this is going to be the fastest top down you'll ever see in your life. Okay, I just want to look at right now just what we did. We opened bullish. We came up high. Still lower high from all of our pressure pushing down. It came back down. We're trading right at the lowest point of the day. Oh my God, where's my... Okay, and this was where we opened. So it is still pushing down. Still pushing down, okay? It could break. If we do push down today, you're looking to fill that wick right there, okay? And there is a big red zone above us. I can see it right there. Okay, hourly. Guys, this is quick. I'm not even doing a proper top down. I'm just going because we have 2 minutes. Okay, so hourly, I can see right there. We still have lots of volume below there. We're still holding below hourly. So there was hourly support, support, support. Now we're below it. Okay, just for scalpers, we got to get above here on the hourly, 45,800. Okay, on the 5 minutes. Okay, so we're in a deep draw trade trend coming down. So guys, this is what we got to look for 5 minutes. Like we got to get some volume above here. Okay, otherwise it could just come in here and continue. They've just, if it breaks below this, continue dropping, you got to look backwards. Okay, you got to do your analysis, guys. You got to look between this purple and yellow line to see how much further down it can drop. There is a little 5-minute pivot right here that could continue building. There was support. That was that second leg that failed, coming back. Now they picked up liquidity to come back up. Okay, so we'll keep an eye on this. 9 EMA, 200 EMA. Our daily bar indicator should be on the 15 minutes here. Okay, so now we got US30 ready, and gold could be shooting back down. Okay. So gold, guys, the daily point of interest is holding. Can it come back up? Sure, it can come back up. But I'm going to wait for, again, volume, things like that. Okay? Now, we'll flip to US30 for now and watch how markets open on US30. So there is a steep downtrend, okay? You don't have to be a rocket scientist to see this, okay? It is trending down. We're in this channel. Okay, so if you're buying, again, you're buying against the trend. Here's lower highs, lower highs, lower highs, lower highs. There was buyers there, came back down. Buyers there, came back down. Buyers here, came back down. Okay, now we got Wall Street market open. Okay, so, you know, when you're looking for double bottoms, you got a 5-minute double bottom right at that lowest point of the day. Will it build there? Bigger buyers now in Wall Street. Now it's coming back down. Okay, good wick. Okay, so it came down, wick. But did it flip? Did it come up? Okay. So consolidation. Okay, so don't worry. The volume could come back in, right? So they're breaking the low of the day right now. The first 30 seconds of Wall Street. Okay, will it catch some support, come back up? If I'm looking below the purple line, remember, we got to look below here. Okay, so this was from that Donald Trump, that 4 p.m. breakout, that one day, okay? Right there was resistance, could be support, and just a really neutral one right in here. Okay, I think it's going to break that, but 625. There it is. Now it's trading at that 625. There it is, that red line. Okay, that was that shallow one. Okay, and that's at the bottom of this parallel channel. Okay, can it pick up a wick here and come back up? Right now they're bleeding out the market. Okay, but let's see, will it come back in? Okay, well, I'm waiting for the full 5-minute regardless on US30. Gold is still bearish, okay? So I'm going to get rid of this zone for now because with Wall Street, there's bigger volume. We'll watch our bigger areas, okay? Bigger things to focus on. Yellow, yellow, down in here, and if it drops, okay? So if it builds its way back up, guys, gold, if it builds its way back up, right back up there and retests this, it could continue to go up, okay? But we got to also understand that gold could continue to sell down, close below, and continue to drop, okay? But a double bottom, right? Bigger one, down. Okay, you see the big move. It got rejected there. We tried to buy that pullback. It was unsuccessful. So now it's coming down. Will it be like a bigger double bottom to take us up there? But wait for the first 5-minute candle to close. Okay, whether you're trading gold, US30, NASDAQ, whatever it is, just wait for the first 5 minutes of Wall Street to close. Okay, sinking, right? So those buyers that bought there, they got trapped. And then now it's bringing down. That's why I don't like taking a trade 5 minutes prior to or just being in something when market opens. If you're in a continued sell in your holding, it's working out perfect for you. But buyers are screwed. Buyers are screwed. Same with gold. When we bought that, we were screwed, right? The volume, it was better to sell that double top. So we had a good return candle, but I was looking for bigger reward, right? Greed clouds our judgment, guys. I'm being honest, as traders. The greed clouds our judgment, right? Looking back at this, when it came up, when I suffered that initial drawdown, when it came up, looking back, review, should have taken my stop loss to break even, right? When it came up 50, 60, 70 pips up there, 80-20, knowing we're going into Wall Street. Then when it came down, I would have lost 20% of my profit. But looking back at the trade, it's always easy. It's always easy looking back. But to follow the rules every day is difficult. Man. That's why, trading is easy, but then people say it's very hard, is because of that, what I'm just trying to say. The greed, we want more, it clouds our judgment. You know what I mean? But still be positive. Okay, I take losses, you take losses. Just still be positive. Just go back and review the trade. Okay, did you wait patiently for a pullback? I did. Could I have got a better entry? Yes. Did I get a shitty entry? Yes. But we're looking back, there was 2 wicks that were building, then it candle turned blue. So I was okay. Did I place my stop loss? Okay, yes. Did I fail on that move? Yes. Okay. So you got to be able to critique yourself. Okay. If you don't critique yourself, you're not going to improve as a trader. I'm sorry. Right? If I don't journal that trade or highlight it and go back and look at it this weekend, I'm probably going to do the same mistake on Monday. Right? So I got to learn something from it. Right? If you don't, and while you're learning, use proper risk management. I lost. I got stopped out. Like, you guys can write L in the chat. I don't care. I got stopped out. But am I here to say that my account is blown? No. Am I here to say that I blew my entire week's profit with that loss? No. Am I still up for the week? Yes. Am I still healthy and happy? Yes. Am I going to get really upset and that trade is going to ruin my entire day? No. So that's how I look at trading. Some traders don't look at it like that. And then now this candle closed. Okay, so it closed. That's a big bar. First thing we can do is grab a Fib retracement tool, open, close. Okay, 50%. It's bearish ignited, continuing to push down. Bearish ignited. There's the point of control of that first 5-minute US30 candle right there. So if I'm looking to sell, I don't want to sell the lowest point. I need to wait for it to pull back in to that zone. Okay, so I'm just going to get rid of a couple lines here. Right? It could come all the way back up right into there and then go all the way right back down. Okay, it could come right through there and close back in here. Then when it pulls back, that zone is green to take US30 back up to there. Okay, so that's the first point of control off of the first 5-minute opening candle. Okay, it's bearish, right? It's continuing. Guys, if you just bought here or bought here, you're in drawdown. Okay, candle has not flipped, nothing. Okay, just bearish ignited, continuing to push down. This red line is, I have that bigger target from right over here. You see, there was the resistance back there on Monday. And that was that Donald Trump, 7 a.m. There was Monday, Donald Trump, okay, that tweet he said, and that could be where it gains support. If not, the yellow line. There's the double bottom on the 5 minutes and that breakout, okay? So we're retracing this Friday from all the way from Monday when Donald Trump made those remarks. It's like the market pumped up Monday, Tuesday, Wednesday, Thursday, and now it's coming all the way back down Friday because there's no peace negotiations. They're they're bombing right now. There's air attacks. I was just reading that. I agree with that, Charles. One thing I agree with is what you just said. We win or lose, it's part of the game. Knowledge is forever. I completely agree with you. In life, guys, you're going to win, you're going to lose, but when you gain knowledge, it can make you more of a powerful person. Nothing to do with trading, okay? You're going to win and lose at life, guys, you know? You're going to suffer in life, you're going to go through some tough times in life, but if you're learning every single day, learning how to be a better person, learning how to be just what we're trying to do is learn how to be better traders, all of these things. It will eventually pay off in the long run. But it's part of your journey in life, guys. That's why life is not easy. Life is not easy. Anyone that says life is easy, man, it's not. Life is tough. Life is tough, okay? But look, hourly white line, okay? So we know that we're holding some hourly support, hourly point of control. So gold is coming right back up. I just want to watch and see if it will close above that yellow line. Could consolidate in here, okay? What else we got over here? Okay, so it came down, US30, coming back up. Gold looks nice, coming back up. So it could just be another pullback, just like us. We were in that buy. It was a beautiful bullish candle, and then they shot us right back down. So this is a move coming right back up. It could come back down, okay? So what I'm looking for is how this candle is going to close, okay? And I'm not scared to go back in another buy on gold, okay? Knowing that I already bought and I got stopped out, I'm not scared to go back in, right? But it's showing me there's still higher low support at the hourly, okay? So maybe it came down. Now it picked up hourly buyers, okay? Higher time frame buyers coming back up. This candle is going to close in 1 minute, okay? So you can look at this as like a whole consolidated zone. This great part of the chart. We had that double top breakout, came back down, could be coming back in, could be still accumulating here to break back up and get us to our target. And how Newt said, maybe 4450 up there. But it could still come up, and we still know we got to battle sellers where they could push us back down, okay? And US30, okay, so we found a wick. It's a bearish hanging man candle. So we know we haven't even flipped this candle blue. It's still bearish ignited, which could continue to come down. Let's see if maybe we can find some consolidation, a flip, okay? We'll watch this going into 940 with gold as well. Okay, so we closed right at that yellow line. So if it comes down, we're looking to pick up or just hold support at 50% of this volume, just to see if we're building some sort of higher low structure, okay? And it could build right here, and with the volume from this market, it could fill that wick and start to drive through here. But that's an impulse, okay? If we do take that trade, it's an impulse. You got to know that, right? Right now it's still black, coming back down. So what I could see is just this little zone came down, back up. If it comes down here, holds, or here, then we recognize that, okay? Or it could just be with this volume, flip. There's no wick to fill on the previous candle, just has to fill this wick and get back up to there. And then the 15-minute candle is building with 5 more minutes to go. We know it picked up hourly support 2 times at that hourly white line. But if you go in a buy, you still know that you're going against this selling pressure, okay? Just so you know. I like it, okay? I'm going to take the buy. This is going to be my final trade of this session. So I'm looking to fill that wick, get back up to that body, maybe target again. See what we can do if we can get up to that 4444, 4445, that structure up there. Stop loss, again, I'm going to go with a tight stop loss. Just below here, okay? Inside the green zone, just below these wicks. Again, I'm just below, just like my first trade. I was just below those equal low wicks. Same thing, just below this, okay? Gonna see if we can build and make our way through there, okay? And this is gonna be final trade of this session. Win, lose, break even, whatever it is, okay? US30 is still pushing down. Okay, you can see now the structure on US30 right there. Body, wick, still pushing down. So if you want to trap like this volume, you could trap it right there on US30 and continue to see who can wait this out, battle this zone out, okay? It could continue to build. If it builds and breaks out and comes back, you're looking for a double bottom to continue move up, or it's going to just continue selling today, okay? So we'll keep an eye on US30 as well. And we've got to watch gold here. Samuel, yeah, this is going to be my last trade of this session. We'll see if this 15-minute bullish volume can continue to build. Watch for a 5-minute candle to close maybe above this daily point of interest. We can build it back on support and maybe come up. Maybe this was the liquidity that they grabbed for Wall Street and to advance gold out of here. Okay, that's what my thought process is. That's why I'm going into a buy. It's a tight stop loss. Like for some of you guys will say, Ron, that's a crazy stop loss. It's for me, it's tight. I'm just below these lows, okay? And then if we get out of there, then the reward can get bigger, right? But we're not there yet, okay? We're nowhere near that. We still got to build this and continue to get that candle closing above there, okay? But we'll continue to monitor for that. Hopefully it goes north for us. And we can continue to watch US30 in here. And news. Any news? No, no news. Yes, Nadim, I'm Muslim. Yeah, you heard me say inshallah. Yes. Inshallah, this trade goes to TP. But knowing trading, it might not. Okay? We're trying our best here. Okay, so we got 1 more minute to go to close. Okay, remember, blue volume has a job to do. Its job is to fill that wick. Okay, I'm not asking for a lot for this blue candle, but the job is to fill that wick so we can continue to advance out and build the bottom of our depth of market. Okay, so it's not, we haven't done that yet. That was a candle that just impulsively turned blue, but still failed to break that. Okay, so we have 30 seconds. Can our 15-minute volume follow us and fill that? No, I don't have the my headset on to play that song. Otherwise, I would. I don't have it on to share the sound. But on Monday, I will. Dave sent me that. Dude, that was an amazing song. Okay, so we got a new 15-minute candle. It opened bullish ignited on the 5, on the 15. Can we continue to do this? With a bullish ignited candle, this is where you want to fill these low wicks and continue to move up. If we can't do it with the bullish ignited candle, it's a failed candle. It's got a high probability it's going to turn black and come back down. So we're still holding. Good. But we want to fill that. I don't want to see equal highs, guys. I'm very technical, okay? Because I know what equal highs can do, and we're coming right back down. So this is a good time. Good. We broke. At least we broke for a high, a new high. That's good. That's what we want. We have a nice 15-minute candle building. Let's see if it can continue to go up. US30, now at least we can see some sort of structure with US30. We found a bottom coming back up. Maybe this could be the neckline, right? And then if it comes back down, you're looking again. Will it continue selling? Will it hold, double bottom, then continue to turn bullish, right? Sorry for all of the arrows, guys, but that's what you got to be watching for, okay? I'm long on gold, but yes, buy on gold, long. But we still have lot of structure above us. It's not easy, guys. Okay. If I draw this red box, if I just scroll it down to the bodies that are already printed, you can see we came in there blue, wick. Came in there on that previous buy, and then they slammed us down right before Wall Street, and now we're retracing right back up. Okay. So just to measure the move, so we know what we're working with, That's 70 pips. If we can get back up to there, it's about 100, okay? This is where I'm just going to reduce my stop loss now just a little bit, okay? Because I already took an L, so I want to reduce my stop loss. So see where I was originally below those wicks? I just reduced it below 50% of this, okay? So I reduced my risk a lot, okay? Just calculate it. That's about almost 100 pips, 90 pips. I just reduced my stop loss, okay? I can still take an L, but not as big. That's risk management. I'm managing my risk. Again, should I be doing something here? Newt, you tell me, bro. Should I be taking out 80% or holding it? Newt's the boss today. Newt, what do we do? You tell me, bro. Are you eyeballing that 44.50? Newt, I'm with you. Take the 80%. No, Newt told me 44.50. We're gonna drive. Let's see. Let's play it out. Let's see what happens. We got good volume. We picked up good. We got good hourly support. Guys, because if we can punch out of here, 4450, no problems. Let's see if we can punch out of here. I'm gonna let it run a little bit more because I managed my stop. I'm okay with that. I had a deeper stop loss. But now I managed it. So let's see if we can run it a little bit, okay? And I'm okay with whatever happens, okay? But let's see. Maybe, we get a bigger reward, right? Sometimes we gotta see what happens up here. But, oh, man, I might have to write this in my journal if I don't get the move I'm looking for. Then I'm gonna come back and say, what happened? It's okay. Let's see what happens. Okay, good punch. I'm watching. Okay, good punch out. Remember, we're filling wicks. Guys, if we can punch out and close above that yellow line, nice pullback into control, and we're gone to 44.50, okay? But we're trading right back in here. We have a solid 15-minute candle, which is young. It's only open 4 minutes ago, bullish ignited. So we got that volume. We picked up our hourly support, but this is that stubborn daily point of interest right here. It's stubborn. You can see push down. So it's not easy, guys, but if we want, like, this is not being greedy, okay? It's just we're got to follow this volume, okay? Maybe I am being greedy, yeah, but I just want to show you guys how difficult it is to break critical daily levels. Not easy. But 20 seconds going to the close. So again, we got rejected. I want to see blue volume hold. Guys, you guys trade what you want to trade to, okay? Because that was 100 pip move, okay? 130 actually, okay? So you follow your rules, okay? That's a nasty rejection. Samuel, you got your money out. 4426.34. Nice. 80 pips. Good. Okay. Okay. So we got a long rejection wick. Okay. That's nasty. That's not, we were up there. We didn't close near the high, nowhere near the high. Okay. So knowing that, if we come back up blue, we have a long distance to crawl our way back up there. So sellers are in control, pushing it back down. This is where now I'm going to bring my stop now, reduce it just below that body. Okay. So I'm right here with my stop loss. So maximum risk. Okay. I don't want to take a stop loss. I'll lose, but I'm only going to lose like 20 pips. No big deal. I'll let you know. Okay. There's a wick right where I'm at. Okay. I'm still in it, okay? Just letting you guys know I'm still in it, but I reduced my stop loss right there to these bodies. I'm still in it, active, but if I get stopped out, I lose 20 pips. That's nothing, okay? I bought the market maker a coffee, no big deal. But I don't want to remember where my originally was, there. So, and then guys, you got to learn why pipping and dipping is the way to go. I'm still in it, I'm right at 2.7. They don't got me yet. Still hanging in. I'm hanging in by a plug. I'm hanging in by a piece of hair. They got me. Okay. Okay. So that's a 20 pip stop loss. That's nothing. That's nothing. Okay. But pipping and dipping in these type of market environments, the way to go. Some of you guys closed out. Congrats. Ron got a little greedy. But see, from here to there, that's like, I don't even follow my rules anymore on these calls. But but it's up to you guys what you guys did, okay? We came back up. I'm treating 100 pips like it's nothing these days, you know? Oh man, this volume is very deceiving. But if anything, my original stop loss was down there. When we started moving our way up, I took my stop loss and brought it below this 50%. When I started to see it coming down, I took my stop loss real tight. I lost 20 pips, okay? If I kept my original stop loss, it would be down there and I would be watching it, okay? And I'd be right back in it, but that's not the way how I trade. I trade. Today, again, I didn't follow no plan. When you guys told me right there to take out 80%, knew I should have listened to you, boss, but I was looking to continue to build out of there. You know what I mean? But I was strict with my stop loss and risk management. So that's what you got to learn in trading, guys. Just manage your risk as you go into profit. You take your stop loss and just start managing it. Some of you guys don't do that. Like I know some of your guys' strategy is you guys set it and forget it. You keep it to a TP or stop loss regardless. I don't trade like that because I follow the volume candle by candle. So I don't necessarily just like, for example, if I was just gonna buy today, like up there, and then I just put my stop loss to there, or sorry, my TP, and I put my stop loss there, and then I walk away. I don't do that. I normally watch each move. That's why you see me getting in, out, adjusting my stop loss. But everyone has their own style of trading. What I'm trying to say, just figure out what works best for you, right? But everyone can do this universally. When we set a stop loss, set it where, like when you take a trade, automatically calculate how much you're going to lose. That's what I do, okay? When I take a trade, I don't even look. When I place this thing, you see me place this, I'm not even looking at the reward to move this or what I'm looking at is the stop loss, okay? I know if I take a trade, I'm in a buy, right? The next thing I'm doing is where am I placing this thing? And when I place it, before I even add this in, I'm looking at the screen there. If I'm buying here, my stop loss at least has to be 50% of this candle or below these bodies or below those wicks. Okay. So even if you're thinking about taking a buy, just measure it. Okay. If you were going to buy there and you want to be below there, you got to know you're at a 70 pip stop loss. If you're below those bodies, it's 100. If you're below those wicks, 150. Now, when I have 150 pips, I'm calculating my sizing. If I'm going to take a 0.1, I know that that's $1 per pip. And if I have 150 pip stop loss, I'm risking losing 150 US dollars, okay? And I got to ask myself, if I lose 150 bucks, is that going to end my career in trading? Is it going to blow up my account? Is that my rent money? No, I'm okay with that, okay? But some traders now, if you go 0.3, right? You're risking $3 per pip. Multiply 150, that's $450 if you get stopped out. That's a bigger number. That might now affect you, depending on what size accounts you have. Some traders use standard lot sizes, right? I use standards, half lots, things like that. That would be, if I'm using a standard on this trade, I have to factor in that I could be losing 1,500 US dollars if I get stopped out. Okay, that's a big loss for maybe someone, but when it all depends on the capital of the account. That's why I trade like kind of percentages. So if I allocate 1% for my entire day, the 1% of my entire capital is telling me how much I'm risking. Example, using numbers. If you have a $100,000 account, some of you guys do, you're trading with those prop firms. Some of you guys have that capital. Let's just use a whole number, 100,000. 1% of that is $1,000. So if I set aside $1,000 for Friday, today trading. Okay? If I lose that $1,000, my account goes down to $99,000. It sucks, but I didn't lose my entire account. I didn't lose 50% of it. I can still recover and learn, okay? Still losing $1,000 hurts, but you still have 99,000 more dollars. That's 1% of your capital. That's okay. That's risk management. Now, with that 1%, that $1,000, do I lay that all on one trade? You can if you're just looking for one trade per day, okay? I allocate 3, 4, 5 trades per day. So if I'm taking 3 trades, that $1,000 goes to 0.33 each trade. I can lose $330 each trade. But if I allocate 4 trades, 0.25%, that's normally what I do. So I allocated 0.25% to that first trade and 0.25% to this trade. But I manage that 0.25% a little differently. If you're taking 5 trades, 0.2. If you're taking 10 trades, 0.1. The percentage will automatically put in how much dollar values you're trading, right? Because that's what I feel like some of you guys need to learn. Because you guys are always asking, Ron, what lot size should I be using for this type of account? It doesn't matter. If you have a $1,000 account, you should be using the same percentages. If you have a $10,000 account, same percentages. 100,000, same percentage. If you have $1 million, same percentage. If you have $1 billion, same percentage. It's all the same percentages, okay? But I know some of you guys are not trading with 1% of your capital per day. Some of you guys are risking your entire account. Some of you guys are trading with 20%. So 20%, if you take a loss, you've lost 20% of your entire capital. That's 1/5 of your trading money gone on a trade, on a day. That's reckless trading. You are a gambler, okay? So this is the way how if I take a trade and I go and draw down, I'm not panicking, right? Because I've already calculated how much I'm willing to lose prior to even waking up in the morning. Okay, you guys got to understand that. I've already calculated how much I can win, how much I can lose in a day. But for my losses, I have a maximum, that's it, like a bottom. If I lose that 1%, that's it. The day is over trading. Whether you took 1 trade, 2 trade, 3 trades, 4 trade, 5 trade, you're not reading the market right. If you take 3 to 5 trades and they're all losses, you're doing something wrong. Even me, sometimes I take 3 losses and I'm not doing something. So what I need to do is stop trading and go and review what I'm doing wrong. You got to learn from that. I don't want to trade tomorrow and have another 3 losses in a row. I don't want to have a whole week of losses because I might take that into my second week. So when you have a day that's telling you a red flag, stop trading, you need to learn. You got to fix it quickly, okay? As a trader, you have to fix your mistakes fast, so you can learn to continue to come back the next day. Because if you don't, then you're going to second guess your entries. You're going to second guess your setups. You're going to be scared to take a trade. Guys, I wasn't scared. Remember, I got stopped out on a buy. I waited for it to grab the liquidity and I came back in. I told you guys, I'm not scared to go back in on a buy. It went up 130 pips. I did something stupid, not by managing my TP. You guys told me take out 80%. I didn't. Now I fault myself for that. But I made up my mind. I was looking for a bigger move. Okay. The only thing that I did was I controlled my loss. See right there how it came down? I would have got stopped out there. So I would have gave an additional pips to the market when I didn't need to. Remember, I was there with that 20 pip stop loss and then it came down there. I would have gave the market an extra 70 pips. For what? I can save those 70 pips to look for a trade later this afternoon and make that up. I conserve my pips. They're like soldiers, right? The more soldiers you have, you can continue to fight a war. If I lose all of my soldiers, how am I going to fight a war, right? So, think like Battlefield, right? Some of you guys play those video games where it's like you got to think of pips as your soldiers. If I allocate a certain amount of pips per trading per day, I'm not just going to give them all. That's why I told you guys, I don't just let trades come and just tap me out at my stop loss. If I see that it's not doing what I want to do, I close the trade. I'd rather lose 30 pips than lose 150, right? That's not having an ego in trading. That's being disciplined. Understanding that, yes, you take a trade, it might not be going your direction, but that doesn't mean you just have to sit and hold it and hope and pray. If you see it's not working, like I knew, remember when we were coming up on that first trade, when it came, it got that wick and then it just flashed black last second. I said, guys, I'm going to get stopped out. I know it. And then this came up blue, it was looking good. And then as soon as it got rejected right there and came down, I said, guys, like I don't need to still hang on to this trade. I know I'm going to get stopped out. I could have closed it earlier, but instead I took the full stop. You guys understand? You got to understand how the markets are moving. Okay. That's when I know you're becoming more of an experienced trader, because you know what you're looking for. And you can say, okay, I took the trade. I can see it's going against me. Let me just get out of this, take a smaller loss instead of taking the big loss. And that's it. And then just keep reviewing. That's how I learned, guys. I'm telling you the honest truth. That's how I learned. No one taught me risk management. No one taught me where to place stop losses. No one taught me go to a break even. No one taught me where to take profits. I learned all that. I'm just trading different on these YouTube calls because I want you guys to get bigger rewards, right? But I know myself personally, I don't know how to explain this to you guys. I'm telling you from the bottom of my heart, I understand how valuable 50 pips is. But for some of you guys, I know your spreads are not aligned with mine. So if I go in a trade, by the time it relays to you, I know YouTube has a 20-second lag. I'm already up in profit. You see, sometimes when the blue candle is coming up 50, 60 pips, you guys are just up 10 pips, 20 pips. So I'm trying for the best of me to hold the trade so you guys can get further into profit. But I know my own trading that I should be dipping out of that candle. And then you guys are going to be like, Ron, you just said buy and now you're dipping out, right? I don't want to be that guy doing that to you guys. So I try for the life of me to hold these trades, but I want to put a realistic stop loss. Okay, because when we send out like signals, we put 200 pip stop loss. You can see I'm trading with 50, sometimes 70, 80 pip stop loss, just below a candle. So if you guys really want to open it up, you can take where we say buy and sell, but open up your stop loss a little more, give it more room to breathe, but just decrease your sizing. I always think in the back of my mind, you guys are over leveraging. That's what's destroying me on these calls is I always think, because everyone says, Ron, I just blew up my account. And I don't want to be responsible for that. Do you understand what I'm saying? It's not easy to do what I do and always think that someone is over leveraging. If you guys are learning and you guys tell me, Ron, we're learning and I can open up my stop loss and give it more room to breathe, I'll decrease my sizes. But you see, if I held that, boom, we hit our target, boom. Newt, 4450, I believed that it was going to break out, but oh man, but guys, I really honestly respect everyone here. Like honestly, everyone in Discord, you guys are like my brothers and sisters, everyone on Zoom, you guys on YouTube, we're all one family here. But let me be the one that navigates you through the markets. Let me be the one to kind of identify. I'll do the top downs for you guys. You guys just got to join, subscribe to the channel. I'll do all the hard work for us. But you guys just please, if I can just ask, I'm begging you guys, just please do proper risk management. That's it. Because then if you gave it some room to breathe, you're now hitting a target, right? Like when we send out signals, guys, like look at the signals we send out. We give them, look, like 200 pips, or sorry, where's the when it comes out, the setup. Sorry, let me just find like a setup. Let me go to gold, since we're on gold. Okay, so you can see like gold when they come out with like a 200 pip stop loss and a 400 reward, 2 to 1. Okay, you can see on these calls, I'm nowhere near trading with a 200 pip stop loss. Okay, I'm more tight, right? If you guys want me to open up my stop loss, I'm more than happy to do it. I'll go lower sizing on these calls for all of us. Because I do a little bit of trading on the side too when we're not on these calls, and I'm comfortable doing my own trading on the side. But for you guys, I want you guys to learn, and I don't want you guys get tapped out with a tight stop loss like me and miss out on a big move. Okay, so hopefully we'll continue to improve. Guys, I'm a trader, I'm not a streamer, but I'm improving on my streaming skills. Okay, I'm getting better at this day by day, candle by candle. It's helping me. Okay, but like, oh my goodness. Guys, these last 2 days have been demoralizing for me. Stopped out on the 2 break evens yesterday and this trade setup here. I got to get these pips back this afternoon regardless. I'll get these pips or I'll die trying, but I won't end today with an L. I promise you that. I won't. I'll get my pips back. It's not much I have to get back. 100 pips, I'll grab them. Don't worry. I'll look for a next 5-minute candle. But guys, I hope you guys had some fun this week. I hope you guys learned. Thank you to everyone that joined. Join this free Telegram because Sunday will update the schedule. I'm going to go the next couple weeks Tokyo sessions. So next couple weeks, if you want to join us in Tokyo, this is the free Telegram channel available for you guys. It's pinned at the top of YouTube. Join it. This is where you get everything that we do at SST. Guys, our website, visit the website if you want to join the Discord, join the website, get all the education and everything. It's available for you guys here. 50% off on the plans. And then, guys, free blogs over here. If you guys can watch this blog, this was the one where we did a live 3-hour webinar breaking down how to do a top down, all the things we do. Man, guys, just with gold, that red zone, we closed above, green. Stretch it into the future. Again, I could look to buy off of this later today. So what I do is this. Set it up. We got the volume closing above. Has it retraced all the way back down in here? Not yet. So 4,400 could look like a nice retracement area. If it comes back, I could buy this and go back up and get my 100 pips and dip for Friday and make my money back. But this could continue driving, okay? Remember, we're not too far. That purple line is the daily high. And gold is making its way potentially back up there. But you still have to realize it tried 2 times earlier right there and failed, just like we did here, where we failed. Then eventually it broke out. But there it could be coming up. If it does, again, you got to respect that zone, okay? Because it could come, again, blue all the way up there and then come back down, okay? If it closes above, retest, you're driving. Then we're going up to 4,500, right? So just respect these areas. And we made it to now the top of the red box again and at that daily point of interest. So had I been in this candle still, that would have been a full target up to there. I'm like, that's where I'm not getting too greedy. That's where I understand the zone we're trading in, okay? But guys, I feel bad on these calls, okay? I honestly, I feel real bad. I should have, because I know a lot of you guys follow exactly what I say and like to the T. So, but on that bar moving up, I should have done 80% out. Listen to me. Woulda, shoulda, coulda. This is what we all should have done. Taken out 80%. That was a 130 pip move, okay? That's getting greedy. Anything above 100 pips as a scalper, you're getting greedy. I'm sorry to say this. I'm a scalper, so I can say this. If you're getting a trade on 1 minute, 5-minute time frames, and it's going above 100 pips, you are getting greedy. Because you know what's going to happen? Guys, listen to me, okay? Listen to your uncle teaching you something right now. We're going to get so comfortable with thinking that we're going to make 100, 200, 300 pips on scalps because the volume is very crazy right now. We're going through, it's wartime trading. But when the war ends and then we go back to trading gold and we're only getting 30 pip moves, we're going to now get so comfortable with thinking that we're going to get 100, 200, 300 pip moves and then the market is going to clean us out. I'm telling you the honest God truth. I was trading all my life respecting 30, 50 pips and doing really well in my trading. And now you can see I'm getting a little greedy. The trade is coming 130 pips and I'm still not following rules because I want 200 and 300, right? So this is where you have to be very disciplined. Understand, this volume is not going to last forever, okay? On all securities you're trading, it's not going to last like this because when the war ends, and it will end, okay, wars will end. Well, whether it's this week, next week, 1 month, 5 years from now, I don't know. But when the war ends, we're not going to get this volume in gold anymore, okay? We're not going to get this type of volatility. Then we're going to go back to trading. When we do the same analysis, our zone to zone might be 30 pips. And then blue volume fills, we don't do anything, and then it comes right back down, right? So I'm telling you, do not get comfortable with this volume because if you're hitting 100, like right there, it came right up to the yellow line. You want more. You want more. I know we all want more, but just the candle alone, bullish ignited. Guys, come on. 270 pip candle and it opened up bullish for a 350 pip extension. That's a daily, weekly goal for some traders. You don't do anything. Look at the market now coming right back down to retest this location, right? So don't piss away money. Don't piss away pips, okay? And don't get too comfortable thinking that you're going to make 100, 200, 300, 400 pips on every trade, okay? Because the market does this to us as retail traders, then it changes and me and you are left behind. So just understand, me personally, whenever a trade hits 100 pips, I should be closing out 80% and going to break even. But I try to hold these trades longer for you guys, but you know, this is what can happen. Okay, guys. Like even just buying that dip. If you just bought that dip, you're in the money, like 100 pips. I don't even have to measure this candle. Like that's 100 pips. Oh my God. I tried that with that earlier pullback, right? That was a pullback. That's 100. Guys, it's getting ridiculous trading. I could have made my money right back on just this blue candle, just bought it and closed it right now. Just came down. That was the first pullback right there. Pulled back. The top, look at the yellow line, how close it is to that yellow line. And it's coming right back up. Like, I don't know how to explain that. If you just waited patiently, instead of buying this that high, wait, came down. This candle alone is 160 pips. Like, guys, this volume is insane these days. It's ridiculous, okay? But your mindset is the most important thing in trading. I'm telling you the honest to God truth. Because one day, you lose your, like to me today, I lost my mindset. You know, I looked for what I was looking for. I failed to close in profit, right? Stupidity. That's stupidity on that candle and that candle right there too. Stupidity. But you guys got to learn from my mistakes. Please learn from my mistakes. If I can relay them to you, I'm relaying you. I did these mistakes in the past. I corrected them. I learned how to correct them. And I want to teach you guys why it's important to have targets when you're trading, not get greedy, secure your stop loss, and take some profit. And then that profit can compound you to the next trade, and keep growing your account while you're continuing to learn how to trade. That's the best way, in my opinion. Instead of just trying to look for big, huge moves every day, because when you're trading in a range, you're going to appreciate the pip and dip. When you're trading in a tight range, when the markets are not these big candles, when you're trading this type of garbage, when it comes up, goes down, you got to know how to pip and dip that stuff until the volume accumulates and it breaks out. But guys, that's it. Have a great Friday, everyone. Enjoy your weekend, and we will see you guys Monday. I'm going to be going back to Tokyo sessions. I'll tell you guys right now. So all of next week will be Tokyo sessions, and those are fun sessions. So we'll watch the open, the futures market, the Tokyo market as well. And Dave will be doing the live New Yorks. Trade setup signals will be sent out all week. And hopefully Dave feels better on Monday morning. And guys, we appreciate you guys. So thank you guys so much. Join the free Telegram, join SST, and thank you guys for hitting the subscribe button. We do appreciate it. Thank you guys so much. And enjoy your weekend, everyone. Thank you guys so much. I had an amazing week. This could be a potential Tetris piece, continuing to push gold up to that highest point of the day. So we had the right intention to stick with buys. And if you had the right intention to continue buying gold, you are correct. You see that leg that sold down, guys, just review. That was that Wall Street move coming down. But look, it held at our hourly point of control. So this zone, where did I get this from? I didn't just pull this out of anywhere. Go to your hourly and look how you can identify solid zones. So remember this? Where did I get it from? You guys know, if you were paying attention earlier, that big bearish candle right there, right? That was that zone from there. It was red. Okay, let me just follow you. How we figured it out. That big bearish structural hour candle closed below. There's the point of control. Stretched into the future. It came in, back down. Came in, back down. Now we saw when we were doing a top down, it closed above. Make it green. Stretch it into the future. We see it held at 6 a.m., 7 a.m. when we started our call. And look, we had two taps on the hourly. The first one at 8 a.m. Comex, and then the second one at Wall Street, 9:30, came up. There's your Tetris piece on the hourly. Sorry, guys, for taking your time on these calls, but there it is. See, blue bar inside black and opened, ignited, continued. So there, that little inside consolidation, that's your Tetris piece, okay? I love to find these on 1 minute candles on 5 minutes, but that's an hourly one. Blue, inside volume. I know it came all the way down. The wick is down there, but the wick respected the hourly point of control, exactly 50%. Came back, and then we judged the body where they closed this. Look at where it closed, inside. Remember I tell you guys, sometimes it takes 2 bars to figure out your zone. Now you figure it out, stretch it into the next hour, 4 hour, 5 hour, 6 hour next week, and open bullish ignited at 10 and continue doing his job, filling those wicks and popping out. Now the hourly volume is trading back to the hourly resistance. Right there, we got rejected at Thursday at 10 a.m. We got rejected right there at Friday at 1 a.m., 2 a.m. Here's London, Europe volume pushing us down, and we held and we came right back up. So now if you're an hourly trader today, you might have an hourly body filling, look, just put a line right there. That's our, look, 4478, 4480. If we can, that's our hourly resistance. Look how much we have. If we can do this move today, gold close above here, retest this, or like down here, retest this. We have clean distance to trade up to 45505. Look, there's nothing. It's just a black candle coming down. We don't have traffic. There's like, this is traffic, blue, black, like consolidation. We don't have that. Just above this wick, it could be a clean move to fill on the daily and the hourly higher time frames for an additional 300 pips today. Okay, you guys understand what I'm saying? Like, look, there's just a black candle that just dropped. That was Thursday at 1 a.m. Now it could be a blue candle, maybe not on this one. Maybe this one will break out, create the high, get a wick, come back. But the next hour could do something like this and then have a clean fill this afternoon, right? Gold might be in demand going into the weekend. If there's continuation war, escalations, wars cause gold to buy. There was a significant pullback. Now we could be retracing. Look at the hourly. Sorry, guys, but I don't mean to hold up your time here, but look at, it's an hourly massive inverted head and shoulder pattern. Right shoulder, left shoulder, all that shit. This whole thing came down, inverted hourly head, come back up. We just traded today, this afternoon, in the right shoulder, and now we're breaking out, okay? So we know what we got to do. An inverted head and shoulder pattern has a high probability to continue to break to the upside. Let's say we break out, it pulls back, we retest, clean drive, filling that, and then if it drives continuing, guys, you have to respect right there. There's a body, a body, a body, a wick, and it was support. Right there, draw a line. Make it whatever color you want. I'm making it white. There was support, 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 support. First black candle that closed below, it retested it, pushed down. Came up, resistance, back down. Came up, look at that body close, and pushed down and had that big drop. That could be where we fill, and then that's a target up there, okay? Just look at the structure to the left, right? Wow, okay? So looking at gold now on the bigger picture, it's bullish, right? The 5-minute candles are trying to get back up there. Now this red zone, right now in the lower time frames, remember we got that from the daily, it's currently, you can change it to green now. We have, well, the time frame that I watch, 5 minutes, it's now closed above this, so we can flip the zone short term and then buy pullbacks down in here, right? But you have to be responsible to understand we're trading at the highest point of the day too. That it could come up, retrace back down, pick up buyers again, higher low, and come through here. Follow your hourly candle. What I would do in situations like this is with the SST daily indicator, take it off 15 minutes and go put it on an hourly. Follow your higher time frame hourly bullish. So go to settings, go up here, 15 minute, go to 1H. Click OK. So you can look at the hourly. Now it paints a different picture when you see that little 15-minute candle, but look at the hourly, very bullish, 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 driving to the highest point of the day. So you can follow your hourly candle. If it closes above, cut this big bar in half. Wait for pullback buys in there, okay? Guys, make trading very simple, okay? Just make it simple. Follow a trend. Use proper risk management when you're trading. Yes, you're going to make some mistakes here and there, but for the most part, you'll do well, right? Okay. So guys, sorry to keep you guys so much longer, but Guys, I didn't trade US30, but just looking at it, it came up right into, look, the red zone, back down. That was that first 5 minutes candle. We found the point of control, came back down. That's the double bottom, what I tell you about on 4 bars. Black, blue, black, blue. That was a scalp candle right there. If you're a scalper, that's your scalp candle, okay? And it's still failing at this red zone, okay? So the volume is just hanging around. When you're not in a trade, clean up your charts like this, okay? Look at what I'm doing, okay? Just want to draw this location because that was the first pivot. Then it came down, consolidated in there, broke back out. So we still have not advanced above. Let me just clean up my charts for you guys. Let me just clean all this shit up. Okay, look. So it's still holding down volume below the lowest point of the day, the purple line. It came down, came back, came down. This could look like liquidity. Came back up, failed, coming back down. So if it picks up and we get this on US30 today, you could look for buys, right? Only if it closes above here. Otherwise, the market is still pushing down. Lower low, lower high. Lower low, lower high. Lower low, lower high. It could continue to sell off, okay? If it comes down here and closes below, come in here, you're selling. Break that daily point of interest. US30 is dropping. It could still be dropping. You could continue to sell with this volume. I wouldn't be looking for buys unless we can close back above here. And then all of this looks like they grab liquidity below the lowest point of the day. If they build it back up, then we could advance out of here. That's how I would be looking at that if I was going to continue to trade US30. If you want to just draw some zones on the 5 minutes, like right there, you can see it's still holding right there. So if you want to use the red box, green box system, right there, you should have a green box. You got your red box. If you don't want to trade inside this area, okay, don't feel like you have to trade this, okay? But you see it's a flag, okay? Directions, moving down, up, down, up. It could trade in here for next 30 minutes, next hour. Just continue doing this. If we get the move, if it's building, watch, higher low, higher low, higher low, and it's ascending and it builds, then you might get your breakout, right? If it continues being bearish, sellers keep pushing down, close below there, retest this, it's red, and then you're dropping back down for sell, okay? So that's how I would be looking at US30 right now. Unless you want to scalp these, look at the average base candle, like just measure one of these nice big blue ones. They're 100 pip candles. Those are beautiful for me. Like I'm saying I love these candles. These are what I do. These are my scalp candles. There's you box it in. Okay, you can see it takes a couple candles to box in. You can see it's clearly barcoding. Black, blue, ignited, short wick, short wick, short wick. Timing, 10-15, new 15-minute candle. Got the bullish move, 100 pips. Again, if you don't pip and dip, this is what happens, right? I know this. You saw me on the calls. If you don't pip and dip in consolidation, this can happen. You can go up 100 pips, it can come right back down. Same with if you're selling. You're up 100, 150 pips, you don't do anything, it could come right back up. And gold, yeah, gold, look, okay. Retesting, holding, continuing to build up. Could flag in here and continue going. Hourly candle is going to close in 35 more minutes, could still be building, okay. Yeah, I was unlucky that Albania didn't win against Poland, but Albania had their chances. Bayrami missing that opportunity, man. But Poland played an amazing game. That header by Lewandowski and then that second goal by Zielinski were amazing. Great game on Poland's part. They deserved that win, but it was good games yesterday, guys. Okay. That's it for me, guys. Have a great day. God bless everyone. Great weekend. And later today, guys, everyone on Zoom, and I'll be uploading the mindset webinar right over here. Where is it? Under education. Scroll down right here, SSD psychology and mindset. It will be the 6th one right here, and it will be on. Sorry, guys, I just forgot what it was. It was a trading plan off the top of my head. It was creating and sticking to a trading plan. Okay. So you see, when you stick to a plan, things can go good. When you deviate from your plan, like me today, things can go bad. So try and have a plan every single day when you're trading. Okay. Shay, these point of control zones are magic. Amazing, amazing. I'm so happy that you're getting it, you're understanding it. Okay. Yes. And then when you figure those out, just patiently wait. Set yourself an alert. I set it like you can set it at the top, mid, or bottom, and just wait. Wait for that volume to come to you. Okay. And then watch when it comes there. Okay. If you're a trader that uses pending orders, that's the best strategy I can tell you to use pending orders. Okay. The only thing with pending orders is when they come down there, you're 100%, you're activated and you're not watching like the close of the candle. But those are a lot of times it comes in those zones and gets those big wicks and returns out of there. So those are those pending buyers that are waiting in there. I wait to watch and see, I like to get in on the wick, but then it might come back down black and close below. Then I see that I got in early. So that's the only thing. But if you use pending orders, that's how you got to utilize them. You got to set them like here. If you had on the hourly, remember what we were just talking about? Remember this zone? Had you been an hourly buyer and you had a pending order there, here, you got filled and it went right into profit, right? So you got to understand. And even if these sellers here have pending sells, they got filled, they got in money. If they have a pending sell waiting, they got filled, they got in money. Same, look how it almost came right in there again. If you got activated in a sell, you're right in the money. Look, it just came in there and just pushed right back down for 160 pips. Okay, so this will always be a zone, always, until the blue volume can close above. Then we flip this into a buying zone because it's still a red zone at the highest point of the day. And we can see hourly sellers are rejecting it. Hourly sellers 2 times are rejecting it. We came up with the higher low off that zone and we traded right into this zone again and they're pushing it back down. So that's why when I tell you guys, when someone says to me, Ron, what type of trader are you? I feel comfortable telling them I am a zone to zone trader. I don't know how more clearly I can make that sound to you. I trade from one zone to the next zone. Okay. And that's it. And for the most part, I like to, when it gets to my zone, take my stop loss, break even, take out 80% and leave 20% running. Because if it continues to run, my runner will run. But in situations like this, you saw today and yesterday, where it reaches a target for me, and then I want more, then the trade comes back down, and you guys know the rest of the story. So that's why I've learned over the years to be disciplined with trading, respect your zones, not worry about what could have or should have happened, because that will cloud your judgment to continue to not follow your rules. Okay? I'm telling you, psychology and mindset is the hardest part of trading. Once you figure that out, your trading is going to change overnight when you figure that out. Okay? And it takes traders years and years and years to figure that concept out. Okay? So thank you guys. Have a great weekend. If you can kindly leave us a like and subscribe to the channel on your way out. We'll see you guys Monday evening for a Tokyo session. But also, if you join the team, you can trade with the guys in Discord all day. This is the community right over here. This is the commodities section. Forex doing his thing. Good job, guys. Everybody in here, okay? Sharing charts, sharing their analysis, sharing their thoughts. Yes, I love this. Shay, I love that. Look at the beautiful. I love it. I love the charting. Perfect. Amazing, guys. Okay. Share your charts, guys. Talk in there, chat. Some of you guys might be bullish. Some of you guys are bearish, but state why you are and back it up with a chart so we can all learn from it. Okay. And the more you guys contribute in the Discord, the more we all learn and the community grows, okay? And then join Dave's live New York sessions, join a couple sessions with me. If you guys don't have the money to join this, no problem. Subscribe to the YouTube channel. We're here with you. I'm here with you every single day, guys, okay? What we do is free for you guys, okay? So thank you, guys. God bless. Have a good weekend. Stay safe and rest up for next week. And we'll see you guys. Time to smoke some weed. Yes, sir, John. I hear you, brother. That's exactly what I need right now. That's exactly what the doctor ordered right now. Thank you for reminding me. Have a good day, guys. Cindy, take care. Good weekend. Samuel, thank you. Have a great weekend. Shay, amazing. Amazing analysis. Shay, thank you for all your contributions. Thank you. Tony, dude, I heard the song. Amazing song. Dave sent it to me yesterday. I'll play it live on YouTube next week. I just didn't have my headset set up. So I'll play it for you guys. Amazing, amazing song. Do you guys want me to play it right now? If you guys have shit, I don't have my headset. I gave it to my son to use. We'll play it for Monday night, okay? Maybe it will relax us. But it's a great song dedicated to trading from one of our snipers in the group. Amazing song. Okay, guys. Have a great weekend. See you guys. Thank you guys so much. Good weekend, guys. Dude, nice buys, man. Nice ones. You were right. 60%. Well correct. Good job, guys. Get those pips and dip out of the market. Don't do silly things like your Unc Ronnie over here. Dip and dip. Get that money and come home. Have a good day.
Recording stopped.
Hey guys, good morning, welcome to the live session of Stocks Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.